Hey, good morning, Cav. Good morning, Stuzio. E. Webster, congratulations. First live money trade in 2 years. And you traded with momentum, direction, and from an area inside of favorable large triggers. What an outstanding way to get it done, my friend. Very nice. I'm a little bit early, guys. I know I'm a little bit early. It happens sometimes. I get so darn excited to see you that I've got to show up, get things going, chit chat while I set up. Hope everyone's doing well today. Hey, good morning, Lyle. Doing your test as of yesterday. Which test is that? Are you with one of the Apex or one of the prop firms now? Good morning, Jim. Good to see you. Gino, nice to see you. Gino, I'm going to mail you a box of golf balls because now I don't have the club speed to hit them. Awesome. So, Lyle, before you went to your test, your prop firm test, were you consistent? Were you following rules? Were you making money? I always ask people this. Good morning, Luciano. All right, so Lyle, your job is to not change a thing. Your job is to not deviate from the plan. Don't worry about getting paid. Do exactly what got you there. Dance with the girl that you brung. One of the biggest challenges for people is when they go to these prop firms is they completely abandon everything that made them successful. So don't ask me how I know. But you're going to do great, man. You are going to do outstanding. Everybody in this room is going to do outstanding because that's kind of what we do. Um, because we can identify advantages. And it's cool to be able to do that. It's cool to look at your charts and go, man, that's not good, and then just do nothing. And it's one of the most liberating feelings ever. So small crowd so far, but it's nice to have you. You got all the cool kids, or most of them anyway. Conservative is good. I used to say that. I used to say, I'm conservative, and I probably was. And now I don't care whether it looks conservative or aggressive. I don't care if it looks, it just doesn't matter to me because I've got a set of rules. I've got a very solid plan. And when my rules are met, I have to take a trade. And when they're not, I'm supposed to sit on my hands and do nothing. And one is easier than the other, for sure. So let's talk news today. Wasn't crazy. The 8:15 news was an absolute bust, but we knew about it. So everybody was able to say at 8:15 this morning, you know what? I'm not going to jump into the market. We're going to see what that ADP non-farm employment change looks like. At 8:30, the unemployment claims came out, and that moved it a little bit, gave it a little bit of a push. I know I was sitting in front of the NASDAQ, and it pushed down pretty well. Um, and that's really it for the news this morning, guys. We've got no more high impact. The rest of it is low impact, 9:45. We do have natural gas storage at 10:30. And then if you're a crude oil trader, at 11 a.m., we have crude oil inventories, guys. That is the equivalent of high impact for the crude oil people because that's when everybody that's waiting to see what the reserves are is going to make a decision based on it. So that's your news for the day. That's what we're looking at. And we're really just going to get to work, guys. We're going to talk about the rules the way we always do. We're going to pull the rules from the tutorial section. Guys, is my audio for most of you? How are we doing here? Give me a thumbs up or a thumbs down. Is it good? So I want to make sure that it's Gino and not me. Okay. I don't sound like I'm in a tunnel. Sometimes if my headphones disconnect, it sounds like I'm in a tunnel, but I'm showing good on my end. Gino, sometimes a reboot helps out a lot. And guys, if I ever don't sound right, always tell me. It's important because sometimes it is me. And I want you guys to get the best from me each and every time. So guys, let's talk about high probability trend trades. Um, this is what I focus on for the first hour. I know we've still got some new people in here, and we've got a lot of people that have been with me for a while. And this first hour, I think, is really good for everybody, whether you are experienced or whether you're new, because what it does is it just reminds you that you can find advantages in the market and you can take trades that revolve around statistical advantages. And that high probability trend trade, what we're going to talk about is a trade where every indicator on each of your charts is going to agree for the trade, guys. You're going to have three very distinct advantages. There's going to be nothing in your way. Your triggers are going to be the strongest. And this is a trade that when you commit to following the rules, typically wins 70 to 80% of the time. And this is a trade that creates confidence through the memory of success. And my brother put it in the room yesterday, and he's so right. He goes, "You're going to learn something. You're going to get better every year for the next 10 years. But if you really focus on simplicity in the beginning and give yourself the best chance of success, there's no reason why you can't find success and be consistent and make money as a brand new user with Nexgen, as long as you go through the process of learning to take the correct trades." So we're going to focus on a high probability trend trade this morning where everything agrees. And from this trade, you're going to develop the skill of being a chart reader. You're going to understand where the market is likely to continue. You're going to be able to see where the market is likely to go, and you're going to understand where the market is likely to stop. And you're going to be able to use these three components to determine whether or not it's time to take a trade, whether or not your rules are met, whether you should hold for bigger moves, or whether you should stop taking those trades. Chart reading is about 90% of our day, and chart reading is going to really drive everything that you do. And your chart reading is going to allow you to recognize these three rules being met. These are the rules for a high probability trend trade, guys. This is your foundation. This is you creating the solid layer to grow from. This is kindergarten. This isn't the end of the road for you, but this is what sets you up, guys. This is pre-calculus, right? This is pre-algebra. This is biology 101 before you get into all the other stuff. You're just getting your basics in right now, and you're going to do that by recognizing three advantages and then taking the trade when they're present. Each rule for the high probability trend trade is designed to give you an advantage. So rule number one provides you the advantage of momentum of a market that's likely to continue in the direction of the trend. Rule number two is going to make sure that there's nothing in your way, none of those likely to stop areas. We call them termination conditions because they can terminate the trend. And you're going to make sure and be able to read and see on your chart that none of those are present. And then finally, the third rule just gets you into the market at the point where it's most likely to continue. This is designed to reduce your risk. This is designed to maximize your profit potential. But each of these rules is designed to keep you on the right side of things, to keep you a little bit safe, to coddle you, if you will. And if you really commit to following these three rules, what it does is it kind of saves you from yourself. It keeps you from embracing opinions or hopes or wishes or wants, because what you'll find is in the day trading world, none of those are very effective tools. So these three rules, three advantages, that's the recipe for a trade. They're going to happen on only two charts. Simplicity is my main focus for new users. And honestly, simplicity is my main focus for experienced users because most of the successful people that I know that trade, they only have one or two trades in their arsenal. They only use two or three charts max. And they trade very effectively with it because they have this very concrete plan that they follow. So we're going to let the large chart lead the way. We're going to let the large chart tell us whether or not we should even be looking for a trade because your large chart is a slow chart. It's a broad stroke of a brush. And the large chart really is going to give you 90% of the information that you need. It's going to define the direction of the market, whether you should be looking for longs or shorts. Longs, of course, meaning that you buy the market, shorts meaning that you're selling. It's going to identify the momentum in the market. And rule number one is going to provide you that advantage of momentum. And if rule number one isn't met, well, then the momentum isn't there, and we're just going to stop the process of looking. It's also going to define the areas. It's going to define the potential trouble spots in the market, areas where it may bounce, where it may reverse, places where buyers and sellers, the people that control the market, may get into fights. And it's going to allow you to stay out of those fights. And when that rule number two is met, when there are none of those areas hindering you, you will have a clear path. That's the second advantage. So before you ever take your eyes off this large chart, before you ever turn right and look at the small chart, you will have the advantage of momentum and you'll have the advantage of a clear path. Strongest triggers possible, absolutely nothing in your way. And then you're going to refine that. This broad stroke of a brush, all this information is one bar on the large chart. It's the most current bar on the large chart. It doesn't take 10 days of data. It doesn't take 1,000 measurements. It doesn't take anything more than a glance at the first bar, and you're going to have all this information. And when the rules are met, we're going to turn our attention to this smaller chart, this faster chart, this refinement chart. And what happens in just that one bar on the large chart can be broken down on a smaller, faster chart into about 15 to 30 bars. This literally refines the broad stroke of a brush. It takes all that action within the large bar, and it produces the ability to enter the market where the market is most likely to continue to take advantage of those momentum and clear path. And the entry chart is used, that refinement process is used because that's what allows you to reduce your risk and that's what allows you to maximize your profit potential. And just a cool little visual of what the charts represent, guys. The large chart is the large crowd. It's what the people in charge want to have happen. Write this down on a piece of paper and a big black Sharpie in front of you. You are not in control of the market. The market's going to go up and down regardless of what you want. The market is going to blow through areas. It's going to stop at areas. It's going to reverse. It's going to spike. It's going to do all these things, and you're powerless to control it. So what we do is we see what the people that are controlling it do it. And when they say the market's going up and they say we have momentum and there's nothing in the way, well, then we're going to embrace the idea that there's this small crowd, the people that don't have these great rules. They're going to fight the large chart, and they're going to give us little pushes down, those little fluctuations that you see. And this is going to take you guys on that smaller, faster chart directly to your perfect entry. So only three rules creating the ability to read charts. And then, of course, I do this every day. How do I get to where I want to be? How am I going to become a confident trader ASAFP? Guys, post your trades in class. Everything you do, post it in the room. If you take a trade, post it in the room. If you have a question about what you're reading on your chart, post it in the room. If you're like, man, I'm just studying termination conditions, let me drop 20 examples of them in there and make sure that I'm doing it right, drop it in the room, guys. This is your classroom, and I encourage that sort of participation. But when you post, hey, good morning, Miss Cindy. When you post, it's important that you tell me why you're doing what you're doing. Tell me why you got into the market. Tell me what your reasoning was, because the whole idea of posting in the room is to receive feedback, to know whether or not you're reading your charts right, you're taking the correct entries, you're following the correct rules. And if you tell me what you're doing, whether it's a high probability trend trade or not, we can work together to seek out advantages and maybe recognize some disadvantages that you didn't see. There are no wrong answers when you post in the room, and I'm going to tell you right now, losing trades are where the magic happens. When you make a mistake and you drop it in the room, we get to go back and have a lesson about the challenges that were present, and what you find is you walk away from that discussion just a little bit better. Always show me where you entered. Sometimes it's the perfect entry and we're just going to high five, and sometimes you could have done it a little better. You could have maybe had a little less risk or a little more profit, and we'll work together to find a better entry if one is available. And then show me where you got out, because the second half of what we do, the first half is getting into the market at the correct spot where it's most likely to continue. The second half is being able to manage that trade. And what you're going to find is that your trade plan will evolve with you as you learn to read your indicators or your management plan. And where you may be taking quick profits now, you're going to be able to read your indicators and understand where the market is likely to go and be able to hold for bigger moves. And if you tell me where you got out and why you got out, we'll work on management together as well. So embrace giving all the information. And then, guys, use your spreadsheet. Nexgen provided you a spreadsheet. It looks just like this. It's in the study picks folder, but I'm going to drop one in the room right now. This is my copy. Please take it. It's got a lot of great stuff on it. But the first page of the spreadsheet is your trade journal. Every time you take a trade. So E. Webster posted a trade today, right? E. Webster's trade is going into his trade journal. And what he's going to do is he's going to come back and study it tomorrow morning. And he's going to say, well, what worked and what didn't work, and what was great and what was bad, and what made me nervous and what didn't. And that little study each and every morning from what he did yesterday is going to set him up for tomorrow and give him a better chance of success each and every day. Guys, this page will accelerate the learning rapidly. If it was a perfect rules-based trade, and after a quick glance, I believe it was E. Webster, it should go into your personal trade setup looks, right? Um, because that's what you want to repeat, guys. The market is patterns. The market doesn't know whether or not it's the S&P or the Nasdaq. The market doesn't know even if it's going up or down. The market isn't a real thing. It's just ticks on a computer. But patterns repeat themselves. And when you find the patterns that are bringing you success, those should become a part of your plan. When you find a pattern that wins more than it loses, that is the basis for a plan. So fill out this green section, your personal trade setups, begin to create your plan. And then finally, the third page is recognition through repetition. Guys, this is where I've stolen a lot of your trades. I talk about the perfect entry sequence, getting into the right spot. There's about 275 pictures of our clients posting in the room using those advantages, momentum, clear path, entry areas. And I just stole them and kind of put them in a catalog. If you're brand new and you're working on slowing the market down, getting to the point to where it doesn't feel like you have to make a decision so aggressively, you will get to the point to where you're anticipating your entries 3, 4, 5 minutes in advance, and all you need to do is wait for the market to get the job done. For you guys that want to trade the Nasdaq's about 5 times faster than crude oil or the S&P. I encourage you to learn your basics on an easier market, and then you can go to the Nasdaq. But there's some little nuances. I've built a section for that. Ideas for management, patterns that repeat themselves. You're going to begin to recognize patterns that repeat themselves every day. And when you see it, take a picture. Write down what it means to you. Drop it in the room. We can talk about it. It may be the perfect lesson, but get it into your spreadsheet, guys. So where my spreadsheet looks all filled out and pretty, your job is to do the same thing in yours and commit yourself to taking about 15 pictures a day, at least. Annotating 15 pictures a day, talking about what you see, what you're doing. And guys, that's going to put you at 300 pictures at the end of the month. And I'm telling you right now, 300 pictures is a pretty good platform to jump off of. If you look at my capture software, I'm up in the 8,000 range. I typically take, of my own trading, 15 to 20 pictures a day. And I take another 20 or 30 pictures of your trades every day. And I do an awful lot of annotating, and it makes my chart reading a much easier task. So post your trades in the class, use your spreadsheet. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. What's it mean to be okay to trade? It means that you have 3 advantages. It means that you have a statistical advantage from pulling the trigger, and you know that this trade, whether it wins or loses, is a trade that typically wins more than it loses. Simulate, practice, get out there, mess everything up, guys. Make 1,000 mistakes because if you're going to post it in the room, every mistake you make is an awesome opportunity for growth. If you've ever been in the gym, guys, they talk about lifting to failure. Because when you fail, when your body fails, when it just can't get the job done, that's when it gets stronger. That's when it gets smarter. That's when everything works out. Um, and then you want to be practicing the correct rules. You want to be practicing those advantages. A lot of people get excited about those green numbers on simulator, and they're like, "Look, I made $10,000 on simulator." And then their simulator girlfriend leaves them when they go live, and they repossess their simulator house, and their simulator Ferrari blows a gasket. Guys, there's the only thing that simulator is for is seeing the potential, seeing where you need help, making sure that you're comfortable with what you're looking at before you ever try to go live. And then we're going to simplify. We're going to talk about high probability trend trades. It's going to teach you to read your charts. And then I'm going to introduce you to a medium probability trend trade that is going to absolutely rely on your ability to read charts. Because a medium probability trade means that there's a problem, singular. It's most of the indicators agree, but something's gone wrong. Your ability to read your charts is going to identify that. Your ability to read your charts is going to allow you to manage aggressively, to be able to take quick profits, to get to a zero loss level. And these medium probability trades will ultimately probably be the majority of your trades. So we're going to do that. We're going to simplify. You're going to simulate and drop 1 million pictures in this room and keep me busy. And we're just going to learn the rules. So we're going to go after it, guys. Large chart leads the way. And the large chart says that I have to have strong triggers. And strong triggers can only happen if I'm trading with the direction of the market. So let's do the direction, guys. If the background is green, the market's going up, we're only looking for rules to be met for long trades. If the background is red, The market's going down. We're only looking for rules to be met for short trades. How easy is that? Unless you're colorblind. But if you're colorblind, raise your hand because I've got a fix for you. So looking at the S&P, this red background behind the most current bar says that I should only be looking for rules to be met for high probability trend trade short. And on crude oil, this green background behind the most current bar says I should only be looking for high probability trend trades long. And then the NASDAQ is telling me that I should only be looking for rules to be met for high probability trend trades long. It doesn't mean that there's a long trade to be had, but it means that I'm going to give myself the advantage of trading with the large crowd, trading with the people that establish that direction. Once I've identified it, I need to make sure that I have strong triggers. Strong triggers are visually like scissors. Um, Small triggers, the solid lines, break above and away from the large triggers, the dashed lines, and an uptrend. Background's green, smaller green, larger green. Everything matches, making it easy to know whether or not you have it. And then that separation created between the two lets me know that the odds are favorable for the market to continue up. And odds favorable momentum is your first advantage. OFM, you're going to see it on the chart all the time. When you have odds favorable momentum, this is the most favorable look for buying Fibonacci support on that smaller, faster chart. This one bar on the large chart, and you can see that this is historical. See that tail, that wick, that little black spot? That's the pullback on the smaller, faster chart. That's that retracement on the refinement chart. Each of you in this room is going to be able to pinpoint where the bottom of that tail is most likely to form. You're going to use these tails as a study tool to go back to backtest, to look at this, to create recognition. But if you see the tail, the momentum was strong, there was a potential entry. And look how it runs up with all that momentum. In a downtrend, the small triggers will be below the large triggers. The large triggers are wide. Everything is red. The space between the small and the large lets me know that the odds are favorable for the market to continue down. And then once again, there's a couple of those tails or wicks. You guys are pinpointing on a smaller, faster chart exactly where that tail is most likely to happen. And this becomes your entry for the highest probability trend trade. Strong triggers. Let's go to the live market. Small's above the large are wide. They're angling in the direction of the trend. There's space between the two. In the moment, the momentum is to the upside, guys. That's a good look. Smalls are below the large here on the S&P. The large are getting wide. There's space between the two. The momentum is very much to the downside. And then on crude oil, look at that. Red trigger, green trigger. They don't match. It's impossible to have odds favorable momentum. But you'll see how this can change. It can go from green and up. It can go to red, but it's still not there. We're waiting for the separation between the two. That's what defines the advantage. Is everybody good with defining the advantage? Is everybody good with strong triggers? This is rule number one, guys. Rule number one fixes mistakes. Rule number one breaks areas. Rule number one pushes a market in the direction of the trend. If you have strong triggers, you can also have weak triggers. And weak triggers mean that the small triggers, good morning, Tater Bear. The small triggers have broken back inside of the large triggers. They've weakened the large triggers. The large triggers have swallowed them up and eaten them. And when you have this weak trigger look, anything can happen up or down, guys. It becomes a crapshoot. You go from the idea of odds favorable to really hoping that the market does what you want it to do. And we've already established the market doesn't care what you want. So let's let the large crowd define the direction. Let the large crowd define the momentum. And be a little bit patient because 90% of our day is just waiting for the advantages to come together. 10% is actually trading. This is my rule number one picture. And rule number one doesn't happen all the time. Odds favorable, starting on the far left, pushes the market down. We get those weakened triggers. ACH, anything can happen. Get in the habit of writing that. Use arrows. Anything can happen precedes a reversal. From the reversal, odds favorable. The buyers take over. They push it up. You guys take an entry right at the bottom of that tail using a smaller, faster chart, and it pushes all the way up to those weakened triggers again where another reversal happens. You're going to see these weakened triggers coming together at Fibonacci areas very often. And it's just going to let you know, no more longs, no more shorts. And then it pushes down. There's that odds favorable. There's a tail. Once again, you guys are getting paid with all that momentum, feeling good about it. And then we get into a transition phase. We get to that point where the small and large don't match. We just saw that. We get to a point where the triggers don't match the background. All the colors aren't the same. This is where the buyers and sellers are fighting, guys. This is where the people that move the market are really going after each other. The buyers want it to go up, the sellers want it to go down. Neither of them can get a foothold, so you see that indecision in the colors. You see trigger lines that don't match the background or trigger lines that don't match each other. This is the biggest red waving flag for you guys to sit on your hands, do nothing, let them fight it out. Great time to go get a sandwich, right? Because eventually somebody's going to win and they are going to provide you that odds favorable momentum again. And guys, that is rule number one. That's the advantage of momentum. See how indecision, right? Bounce, bounce, bounce. Nothing matches. It's all ugly. And then coming off of this support, now we're starting to get momentum. We're getting separation between the two. We're watching it happen live. Odds favorable momentum to the upside. Pretty cool, right? And look at that big blue line that stopped the market cold. That's rule number two, ladies and gentlemen. That is making sure that you're not trading into one of these areas that may stop the market. No termination conditions, because the termination condition is where decisions happen. Whoops, wrong one. These fibs, these yellow one-to-ones, divergence high and low lines. This is where buyers buy and sellers sell, and this is where profits are taken. And guys, when you get caught right at these areas where the decisions are happening, it's an easy way for the market to turn on you. It's an easy way for things to not continue in the direction of the trend. So rule number two is designed to give you the advantage of a clear path by not trading into one of these termination conditions. So let's go through the recipe for a termination condition. It's not a difficult task, and it's actually very easy to study. So we're going to do this. We're going to look at this one. Price is coming down. Price, anytime I reference price, price means these dynamic Renko, these price bars. It's just fluctuations up and down, and they create these bars. So price is the bars. When price reaches Fibonacci support here, that is the first part of the equation because decisions are made at key areas. When price reaches Fibonacci support, you have to ask yourself, where are my trigger lines? Where are those same trigger lines that created the momentum for me or told me that there was none? If they remain above Fibonacci support, no more short trades, guys. This support may stop the market. It may reverse the market. It may create an untradeable bounce. You don't know what the reaction is going to be, but you know with no uncertainty that if price reaches that area and the triggers don't break, sit on your hands and do nothing. You have lost the advantage of a clear path. Same thing with these divergence lows. So price comes down and goes up, creates a pivot, is what we call that. If momentum is lost at the time of that pivot, if momentum doesn't follow price, you're going to see the cyan line from a low. This is what we call a divergence low line. This on its own is not a termination condition because the first part of the recipe is that price reaches one of these key areas. So when price comes back and retests this line in the sand that was created by a loss of momentum, you guys just ask yourself, hey, where are my trigger lines? And if they remain above that divergence high line, well, no more short trades. You've reached a termination condition, guys. We call this one a pivot stop out of a prior divergence. And if it reverses the market, if the market goes rocketing the other way and gives you a rules met trade, that's the highest probability trend trade that you can take, the one that happens after a termination condition on the 13-2. These pivot stop outs are just rock star strong, but they're even stronger when they coincide with Fibonacci areas. So here we have kind of the same deal. Everything says up. The smalls are even trying to break above the large, but it reaches Fibonacci resistance. And when it does, all you have to do is ask yourself, well, where are my triggers? Since your triggers remain below Fibonacci resistance, you're not going long. You're not hoping that it breaks. You're not wishing that it breaks or wanting it to break. You're simply saying, I don't have the advantage of a clear path. Let me sit on my hands and see what the reaction is. Well, the reaction is a rapid push all the way back down to Fibonacci support. When it reaches Fibonacci support, all you have to do is ask yourself, where are all my triggers? And if they're all above that area of support, guys, it's okay to do nothing. Doing nothing is the most important skill that you can have as a day trader. And you're going to say to yourself, but Mark, I had momentum. But Mark, I was with the trend. But that big blue line says not yet. It's just not your trade yet. And thank goodness you didn't take it because it comes all the way back up to that Fibonacci resistance. Guys, you're witnessing that fight between buyers and sellers. Um, Capture isn't behaving for you. Just reboot it, Andy. Go to your task manager, get rid of everything, and just reboot it or just reload it. Capture is a 3-second load, so I've done that more than once. And then get with Jason too, or if there's something I can do to help, let me know. So price reaches resistance. What are we asking ourselves? Where are the triggers? They're all below. I can't go long. I'm not going long anyway because I have a red background. I reach the divergence high. It creates one of those pivot stop outs, another termination. I'm still not going long. I'm not going short yet because my triggers are green. I don't have momentum. And then it reaches that second level, guys. And this is very common. The market likes to go up and down. There's always big fights. You're witnessing it. But I want you to see what happens after this termination. The small are below the large. The background is red. I have the recipe for odds favorable momentum. This price bar has not reached the area. Remember, that's what determines whether or not I've reached a termination condition. So I have a clear path. And there's one of those tails, guys, and a lot of you are finding this right here. This is your highest probability trend trade that happens after a termination condition that creates a full reversal. Guys, that's the best of the best. This is the entry that we're talking about right now. We're setting the stage for it. But you have to remember the recipe. If price reaches an area, ask yourself, where are the triggers? If they remain above, as they do in these yellow one-to-ones, it's okay to say, I have to wait a second. Let me see what the reaction is. And look at the reaction here. The market goes up, down, up, down, up, down. There's a huge fight. The colors don't match. You're below resistance. You're above that area of support. Guys, there's not a thing for the next-gen user to do here. This is their 90%. This is rule number 2, keeping you out of the fight. Eventually, you get odds favorable momentum. The buyers take over. They win. All your trigger lines are clear of the area. There's room to the next area. And guys, there's your tail. There's your potential entry, that highest probability trend trade. All you have to do is be okay with the idea that if the triggers, that if price reaches an area and the triggers don't break it, it's cool to sit on your hands. It's okay to sit on your hands. This is a textbook termination condition. And then if this is a termination condition, when is the termination condition gone? When is this area no longer a threat? When both the small and the large triggers get to the other side of the problem area, both the small and the large clear the area. Now the path is clear. Now you have a clear path to get to the next key area. And if you just insist on a clear path, if you're like, man, the only way I'm taking a trade is if both triggers are above that area that used to be resistance, or both my triggers are below that area that was once support, it's going to eliminate a lot of challenges for you. Rule number 2 is the most broken rule for new users. And I want to show you an awesome picture from the S&P this morning. Triggers don't break resistance and it pushes down to support. Triggers don't break support and it pushes up to resistance and a divergence high, back down to support, back to resistance, back to divergence lows and support. Guys, rule number 2 keeps you from hoping, from wishing, from wanting. Rule number 2 keeps you calm. It keeps you patient. It keeps you waiting for the absolute best of the best. And there's no reason to give it away in these areas of consolidation. There's absolutely no reason to give it away when the market simply isn't giving you the information that you need. And you can see again, this is a giant fight. It's keeping you out of crude oil right now. And if you're a NASDAQ trader, it's keeping you from going long just yet. And if you're an S&P trader, well, it finally broke. And it's kind of cool because all that patience, there's the tails that were probably your best chance of success. But what you're going to do, guys, is you're going to learn to respect rule number 2. You're going to learn to insist on a clear path. And it really is simple. It's either broken or not, right? Your sim girlfriend's already packing her bags, Andy. Man, make all the mistakes on simulator, Andy, but show me the picture. Let's talk about it. One of the things that I did a lot when I was learning the indicators, ladies and gentlemen, is I assumed that I knew what I had done wrong. I assumed that I knew what I had done right, and the reality is I didn't have the repetitions to have that kind of insight. And when I really started leaning on my brother as a coach, when I really started participating in class, it cleared up so many of my misconceptions. So no worries, Tater Bear. I'll tell you what, guys, always tell me this because that means that I'm going to go up and I'm going to find Tater Bear's chart and we're going to take a look at it. And guys, this is really the only way where I'm going to jump you to the front of the line. But it's important to do because I want to make sure you get all the information that you need. And Tater Bear, you are killing me with these tiny little charts. Let me see if I can make them bigger. That is your large chart. And so you went long. Am I reading that right? And Tater Bear, you still have the wrong template. You're running a small chart template on your large chart. Large charts shouldn't have two sets of triggers. Your small chart looks pretty good though, but I don't know what your large chart is really saying. But just based on what I'm seeing on a large chart, I'm seeing resistance that held and triggers down and no reason to go long there. But on the small chart, it looks like a pretty good trade, right? You did or you're going to? Your 5-1 looks perfect. You didn't save the workspace somehow. So I need you to right click and I need you to right click and get that 13.2 template on there. But the cool thing is by recognizing the great entry, let me back up a little bit. That is what your 13.2 chart should have looked like, Tater Bear. There's no rules at all that revolve around getting into the market because of a background change. A background change does not tell you to get into the market. It tells you which direction you should be trading. But look at this. Look at the large chart. Odds favorable. Look at the large chart. Hadn't reached the area. That's your entry, brother. Beautiful entry. And I'll tell you what, you got that entry with a really wonky chart on the large chart. Rule number 3 gave you the vision. Well, yeah. I'll tell you what, you took the perfect entry based on the small chart. You didn't even realize that the small chart was, or that the large chart was giving you those advantages. You're going to be unstoppable once you have both charts looking the way they're supposed to. It is a textbook entry. Textbook entry. And I think it's pretty cool, and it shows that the methodology works, guys, because E. Webster and you took the exact same entry, damn near the same price. And that's what we're going to talk about next when we're done with termination conditions, guys. So absolutely beautiful trade, great entry. Let's get that large chart taken care of, though. I need you to right-click on your large chart and go to your templates. And you want that 13.2 Rinko, man. Right now, you're running the 5-1 chart template on it. So I need you to do the 13.2 Rinko. And I'll have John check the installers to make sure that it's not an error over there where maybe it got doubled up on it. And then you're going to be unstoppable. Unstoppable, because that entry was perfect. And entries are really the biggest one. And then make sure that you save the workspace. Absolutely. Good stuff, man. I hope you have a good day. I know you have to go to work. Guys, always do that. If you need a little feedback before you split, just say the word. I got you. So one more look at termination conditions, using the lines on the large chart, using those areas, fibs, yellow 1-to-1s, divergence highs and lows. If price reaches the area and none of the triggers break, guys, you don't have a clear path. Rule number 2 isn't met. Don't do a darn thing. Just wait. See what happens. Eventually, what may happen is the small and large get to the other side. Resistance behaves as support. You now have a clear path. You also have odds favorable in one of those pullbacks. Look at that. You guys just got long. This is your high probability scenario, guys. Left and right. High probability. It's either broken or it's not. It's either clear or it isn't. This picture in the center, this is going to be your first medium probability look, guys. And a medium probability trade means that a small issue exists. Your small issue is going to be that you don't have a clear path. But when your small triggers smash through the area, and I mean smash, guys, don't let them just peek their head above a red fib. Make them really commit to getting above that area or below that area. Because when your small triggers smash through the area, you have odds favorable momentum. And this is the key to areas breaking. Odds favorable momentum can break areas. So when the small triggers break through, the momentum is its absolute best of the best, guys. This fib has the potential to break. It's hard to stop a loaded freight train, but it's not a clear path yet. Rule number 2 is not in effect. So this means that you're no longer in that high probability scenario. You're going to work your way into a medium probability scenario. I'm going to give you guys the absolute best of the best way to take that. I'm going to give you a plan for it. But when you're speaking to yourself in advantages, if I don't have a clear path, I better have momentum in an entry area, right? And if I don't have the best momentum, I sure as heck better have a clear path in an entry area. And I don't ever give up 2 advantages. Because there's 13.2 with no tick replay 2023, and it has the addition of the 21.3 large. You don't need that. You want the second one right there. So John Novak creates workspaces and templates for a wide variety of people. So what he does is he has a set list and he drops them into the installers. And there's people with a little more advantage. So 13.2 over here is designed specifically for the NASDAQ. See NQ? So on the NASDAQ, the 13.2 is the small chart, not the large chart. So the 13.2 NASDAQ chart looks like a 5-1 chart. What you want is the 13.2 Nexgen Dynamic Renko Bar Chart 2023. That's the one you see them loading? Yep. So that is designed for the NASDAQ. That NASDAQ 13.2 is the same template designed for NASDAQ as a 5-1. So it's going to give you all those. Cool. Thanks for sharing that because that's a pretty big deal, probably for a lot of people. Nicely done. $13.2, big dog. So guys, is everybody cool? You're welcome. With the idea of a termination condition. If price reaches the area and the triggers remain above at a low, there's no reason to take that trade, guys. That is into a termination condition that may reverse the market. The same thing at a high. I'm going to drop it in the room for you. If price reaches the area at the high and the triggers remain below, it's a termination. No more trades. Wait for the reaction. Wait to see what the market's going to do. And big dog, if you go to the resources page, if you want to build NASDAQ charts, you can run the installer from the resources page and it'll have the NASDAQ workspaces already built for you. Might save you a little time. So guys, that's the advantage of a clear path, right? And you can see it here. Crude oil got caught on number 2. Eventually, small and large get below. We have odds favorable momentum. The path is clear. And look at the pullback on the smaller, faster chart. You guys are just a few moments from pinpointing that amazing entry. But before we do that, I want to talk about one more termination condition that helps you identify change that you can't see happening on the large chart. Guys, remember the large chart is a giant, slow-moving chart, and you don't see change happening really fast. Sometimes you have a clear path and it goes up, and sometimes you have odds favorable in a clear path and it goes down. This final termination condition is a small chart termination condition. This is the only small chart termination condition. And The large chart uses lines to define areas, right? The small chart is going to use lines to define entry points. And that's the difference between the refinement and the broad stroke. But on the small chart, divergence is still divergence. It's still a loss of momentum. And when I see three cyan lines from a low, three divergences from a low, or three divergences from a high, it may terminate the trend, guys. This is rule number two not met. Three cyan lines, three magenta lines, no more short trades, no more long trades. You're going to see these prints maybe from a low or a high when your large chart doesn't seem to have any reason to turn. You're going to see those three divergences on that refinement chart from a high or a low, and it's just going to tell you no more short trades, no more long trades. Or if you're in a short trade already, and three divergences print while you're in it, this gives you the opportunity to manage out of that trade, to conserve equity, right? To keep the powder dry, take quick profits, GTFO, because three divergences in the same location may terminate the trend. Becomes even more powerful. Notice how the small triggers work their way inside of the large triggers, that anything can happen look. Guys, momentum, the separation between the triggers is universal, no matter what chart you're looking at. Here it has odds favorable. If you take that perfect entry, it works its way into three divergences and weak triggers. That's a very powerful indication that it may push up. It may not reverse the trend for the day, but it may push you way beyond that best of the best entry. And the same thing is true from a high. So, guys, that is termination conditions. That is making sure that you have the advantage of momentum. That is making sure that you have a clear path, that you are doing what the large chart says. The large chart is up. The large chart has odds favorable. The large chart has no terminations. Does everybody see that on the most current bar? Because this is the precursor for turning your attention to the smaller, faster chart, that refinement chart. And if you allow yourself to have these advantages in every trade, your potential is going to go up exponentially. So when the large chart says go, we want that small crowd to do their thing, right? We want them to fight the trend. We want them to fight the momentum. We want them to fight all those things that have us looking for a trade. And they're going to provide us a little pushback, guys. And that's rule number three. You're going to use a limit order. You're literally going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback, that little push from the small crowd fighting everything. And that pullback needs to be at an area. So while we use lines on the large chart for trouble spots, we're using lines on the small chart for entry because they create a bounce point. And we want that area to be nestled inside of what we call favorable large triggers. And remember, guys, we're blanketing for the new users. This is your best chance of success. This is your smallest risk entry. Because when the small trigger or the large triggers and the synthetic triggers on the small chart work together, overlap, one on top of the other, wide angled in the direction of the trend, guys, the areas have to be inside of them. So the tighter they are, the smaller your window of opportunity, that point where the market is most likely to continue. Um, so this is going to be what you're looking for as a brand new user, this best of the best. Eventually, you're going to get to a point where there may be a little more separation, but the wider the triggers are apart, the bigger the window becomes, the more risk that you're going to have on a trade. So embrace the idea of favorable large triggers. And it doesn't matter if the area is in the synthetic or the large, they work together to create the range. And we're about to look at that. When everything says up, when the triggers are the strongest, when the path is clear, this is going to be the look on your small chart. And all you're doing is you're making the decision. Remember, I said you're going to know where your trade's coming from, typically 3 or 4 minutes in advance with a little bit of study. When everything says go on the large chart, here's the look on the small chart. Strong triggers. The large and the synthetic are both up. They're wide. They're favorable, one on top of the other. And you're just going to turn your attention to the areas that may fall within, guys. Fibs, mid bands, yellow one-to-ones. These are the areas where high probability trend trades originate. So I've got my triggers, I've got my areas, everything says up, and I need those yahoos on the small chart to do their thing. And that starts with a reversal bar. You're gonna let the dentist take your money? Oh, hopefully you're on simulator, Andy. Do you need to go to the dentist now? And that's okay. So, Andy, we got to do this, brother. We got to do this to get the most out of this classroom. You got to tell me why you did what you did, but tell me on the chart, right? Tell me on the chart. Don't tell me in the chat room because I'm going to miss that when I go to your pictures. Start writing it on the chart. And it's not just for you, or it's not just for me. When you write on your chart what you did, guys, you got to go back and look at it. You got to see where your mind was. This right here, it just doesn't tell me anything. I don't know if you went up or down. I don't know if you went long or short. I don't know where you got into early. I don't know if you traded into a termination condition. I don't know if you fought the trend, right? I'm not picking on you, Andy, but man, write your dissertation on there because what happens is you're going to come look at this tomorrow. And if your chart says clever things on it, if you've got information on there that tells you exactly what you did, why you did it, where you did it, why you got out, well then man, now you're creating this repeatable scenario where you can come through and do it over and over and over and over again. So look at that. Odds favorable, high tick, favorable area. E. Webster knew exactly why he took that trade, without a doubt. And I know exactly what you just did because I just went to crude oil. But guys, let's get this entry, okay? Let's talk about the best of the best. The small crowd starts their thing. The reversal bar happens, and you guys are looking for areas inside of favorable large triggers. You're going to create your window of opportunity. You're going to create this box where the market is most likely to continue. And for a long trade, it's going to extend from the highest point of support, that mid band, to the lowest point of support, those yellow 1-to-1s. These large favorable triggers are coming up like a shark about to breach. They're going to swallow that mid band. This box becomes your window of opportunity. This box is where the market is most likely to continue. This box is what I want you to spend 20 days being able to identify. You're going to activate a limit order right at the top of that box. And if the market comes back to your order at the top of the window of opportunity, you're in a long trade, and you're in that long trade with the advantage of momentum, and you're in the long trade with the advantage of a clear path. And that long trade came to be because you took an entry at the point where the market is most likely to continue. Guys, this is your focus for 20 days. Get into the market where it's most likely to continue. If you're in where it's most likely to continue, you have to be okay with a little bit of overrun. As long as it stays within the window, life is good. But this white arrow represents where the market shouldn't go, outside of that window of opportunity. And this is why being able to pinpoint that window is so imperative, because it allows you to manage your trade. You're going to put a protective stop outside of that window, guys. And if it pushes beyond those yellow 1-to-1s, 4 or 5 ticks, you're going to exit the trade. You're going to exit with a loser. But you're going to say, you know what? I just took a loser. But I know that when I had momentum and a clear path and I got in where the market was most likely to continue, this is a trade that typically wins 70 to 80% of the time. This is my typical result. And you're going to learn to be okay with the occasional loser. It's just a normal part of a positive equity curve. And anything that wins 70 to 80% of the time, it has to lose 20 to 30% of the time. Guys, there's no way for the math to work out otherwise. But what's cool is when it does go, you're going to reduce your risk below the reversal bar. You're going to reduce your risk even more. Waiting for the pullback to support inside of favorable large triggers gave you the smallest amount of risk. And because you waited for the pullback, it gave you the furthest run to get to your profit target at that next key Fibonacci area. Is everybody good with that? We're going to go through this real quick. We're going to find an entry together. We're going to use E. Webster's trade. Let's get rid of the cheater here. So hopefully I'm doing this right, guys. Let's go through the whole process, start to finish. How do I find an entry? It starts on the large chart. So on the large chart, it's red. We should only be looking for short trades. Does everybody understand that? I'm not looking to go up. I'm not looking for anything other than trading with the direction of the market. It doesn't mean jump in. It means let's look for rules to be met. The first question I ask myself is, do I have odds favorable momentum? So guys, give me a Y in the room if you see it, if you understand it. Small triggers on the most current bar. Small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Everything says this market is likely to continue in the direction of the trend. Guys, that's rule number 1. And now your little lesson on termination conditions. The bottom of the bar has not reached Fibonacci support, which means price didn't reach an area, which means that this area of support is not a termination condition. What is it, guys? This becomes a target. This becomes where the market is likely to go with all that momentum. It's not a termination, it's a target. This is where I want to go. Odds favorable, no terms. Turn my attention to the smaller, faster chart. Everything says down. My large and synthetic, they're one on top of the other. I see one-to-ones. I see Fibonacci resistance. I see a mid-band. But I need that small crowd to do their thing. Everything continues down, and what I need is a reversal bar. Is everybody with me so far? The reversal bar signals the beginning of the pullback, that fight by the small crowd. At the time of the reversal bar, I'll draw a circle from the lowest point of my triggers to the highest point of my triggers. That's a pretty big range, isn't it? That's a lot of space. Let's refine it. Let's create the window of opportunity, because the window of opportunity goes from the lowest point of resistance, these yellow one-to-ones, to the highest point of resistance, that mid-band. This little circle, guys, it is 5 ticks wide, $50 wide. This is the best of the best spot. This is where the market is likely to continue. I'm going to let this line represent our limit order, and let me show you some of the problems that we have. Some people go, well, it might go to the top of the window. Let me put my limit order here. Remember that odds favorable, clear path. Guys, there's nothing to create a bounce. We're relying on a fight. So my limit order goes a tick or two below the lowest point of resistance inside of favorable large triggers. This is where I'm waiting to enter the market. This is where I'm hoping that these guys can fight all of this momentum to get me in. And they're coming up and I'm getting excited. And they're coming up and I'm getting excited. I'm so excited. And now I'm in a short trade. And now I'm in a short trade with the advantage of momentum. I'm in a short trade with the advantage of a clear path. I'm in a short trade having entered where the market is most likely to continue. Do you see it? And then my stop, the highest point's at 84. My stop's at 89, guys. I have 11 ticks of risk on this trade initially. Is everybody with me so far? I'm in where the market is most likely to continue. My protective stop is placed where the market should not go. And I'm powerless at this point. It's either going to go up or down. I have no say. And it's still going up, and my palms are sweating, and my heart's starting to race, guys. And it still goes up, and son of a gun, I hope I don't take a loser. My simulated girlfriend's going to leave me, just like Andy's. And then I get a reversal bar in the direction of the trade. I get a reversal bar in the direction of all that momentum, in the direction of that clear path. And my stop, guys, goes 2 ticks above it. And now I have 6 ticks of risk. And the market goes down. So we were in at 78. There's $100 worth of profit right there. But I get a second divergence. Where should the market continue? I still have odds favorable. I still have a clear path. I do have 2 divergences, but it takes 3 divergences to kill a high probability trend trade. So let's see where it bounces. Right below the one-to-ones inside of favorable large triggers. Now I can have like 3 ticks of risk if I want. And the market comes down again, but now I have 3 divergences in the same price range. 3 divergences to say, hey, let's manage out of this trade. Let's wait for it to get right again. Does that make sense, everybody? 3 divergences is a termination condition. 3 divergences can be an exit condition. And it pushes up. And this one does go down. And here's one of the realities of trading. Sometimes you're going to exit a trade because the rules are met, and you're going to be okay exiting that trade because the rules are met. Because if you scroll back and look at 3 divergences over and over, what happens is you're going to see that 3 divergences very often creates a bigger push in the wrong direction. 3 divergences can reverse a market, right? Three divergences can create a lower push. Divergences can make it go up. Three divergences can be the precursor for all the down. So even though this time the market decided to go down, you're okay with it. The three divergences said, hey, it's not as high probability as it used to be. Let's sit on our hands. And guys, your job for the first 20 days is to simply identify this entry. Does that make sense to everybody? Does that help a little bit to see it bar by bar? That took us 3 to 4 minutes to do it, right? You're going to get to the point to where right here, you know exactly where your entry's coming from, and you can't wait to get into that market. You're going to be so excited for that reversal bar, and you're going to have your limit order waiting here probably about right there. Man, just come back to those one-to-ones, please, please, please. And this is our focus, guys. This is what we do every day. High probability trend trades, giving yourself the best chance of success. So I'm going to give you guys a checklist. Especially if you're using market replay, guys, you can actually pause market replay and go through this checklist. Make sure that you're taking the right trades. This is also for you guys that are learning rules. This is what you should be writing on your chart. When you're talking about why you did what you did, you should be saying, hey, I had odds favorable momentum. I had a clear path. I had an area inside of favorable large triggers, and reinforce what it takes to be successful, what it takes to win more than you lose. Guys, this checklist can be printed out, put on your desktop. I've never had anybody use it to the letter. I've never had anybody give me 4 yeses and do worse than 70% ever. And remember, the goal is to win, right? To win more than we lose. Here's the same checklist with pictures of what the rules mean, guys. Does your chart look like this? Termination that creates a full reversal. Did your chart have odds favorable? Did your chart have no terminations? Did you identify the window of opportunity properly? You can check yourself. You can study this in the morning before you ever start. I'm going to drop this in the room for you as well. Steal these, guys. Use these tools. And then finally, Ron said it earlier, and I'm going to reiterate, if you don't have a written plan, you don't have a plan. People love to say, oh, I know what I'm looking for, right? Guys, that opens the door for your fears and hopes to get in the way. Having a written plan, knowing exactly what it takes, a proven set of rules that you have back tested, taken pictures of, a proven set of rules that has proven, that's redundant, to win more than it loses. That should be the basis of your plan. This plan that I'm giving you right now is called the KISS plan. This plan is the Keep It Simple Sunshine plan. This plan has gotten brand new users funded in the first 30 days on those prop firms. But this plan is just a stepping stone, guys. Traders tend to want more. They want more, they want more, they want more. And I haven't figured out why that is. But this is a stepping stone in your learning journey, guys. This one is designed to optimize your chances of success with a high probability trend trade. This one is designed to give you the best chance of winning more than you're losing. And like I said, I've had people run this plan exclusively at about 85% winners. Um, and it's going to be through simulation, study, class feedback, and continuous practice. Guys, that's what's going to have you building your own plan. That's what's going to have you finding your trade. That's what's going to get you to the point to where you're like, yeah, I learned how to read my indicators, but my trade has more to do with momentum and getting to the other side of things. And maybe it's a momentum trade. Maybe it's an HVA trade. Maybe it is a counter trend trade or something that uses a pattern that you recognize. Your ability to read your indicators is going to get you to that point, and this KISS trading plan is going to keep you on the right side of things until you get to that point. So your simple plan for consistency, guys, until you can create your own plan through your chart reading, it starts with don't fight the large chart direction, don't fight the large chart triggers. It is a recipe for disaster that has been proven year after year with Nexgen users. So stay on the right side of things, go with the flow. We've defined our entry. We've defined the best of the best, that point where the market is most likely to continue. It revolved around momentum, good tops and bottoms, no terminations, guys, everything that you look and hope for to get you into the trade. That's the first step. The first step is getting into the market because when you get in at the right spot, it creates a very manageable scenario. So management becomes your second piece of the puzzle. And once again, there's that phrase, you will craft a plan tailored to your personal goals based on your experience reading the indicators. The better you are at chart reading, the different your plan is going to be. But until you get to that point when you're brand new, when you're getting reps and you're just trying to be consistent, the same kind of pragmatic, methodical approach to management has proven to be the most effective for users, the same way you use that approach on your entries. And everything begins with letting the large chart lead the way. Everything begins with having those advantages, the advantage of momentum, the advantage of a clear path, taking the perfect entry inside of favorable large triggers. Um, Farak, here is my spreadsheet. It is in the room. This has all the visuals that I'm talking about, and there is the KISS plan itself that I'm talking about. You're so welcome. So when you get in at the right spot, guys, when you take the best entry where the market is most likely to continue, your ability to identify that window of opportunity also tells you where the market shouldn't go. There's your potential stop, 4 or 5 ticks above the top of that window. Guys, if it goes up there, you're out of this one. And small losses are a normal part of a positive equity curve. But what this methodology does for you is it allows you to manage your risk before you ever manage your profits. And when this happens, there's only one or two things that this is going to do, guys. It's either going to go up and hit your stop, or it's going to give you a reversal bar in the direction of the trade. And if it does, you're going to reduce your risk. You're going to get 2 ticks above that reversal bar. You're going to say it's doing everything the large chart said it was going to do. Therefore, I'm going to reduce my risk. And at this point, there's nothing to do. Roll back from your chart. Hands off the mouse, guys. You're either going to take a small loss or it's going to hit your first target. This is all in the KISS plan. It's nothing but if then. If I take the perfect entry, then my stop goes here. If it gives me a reversal bar, then my risk gets reduced. If it hits my first profit target of $100, I'm going to let out a little yippee and do the happy dance. I'm going to feel a little more confident because I just reached a profit target. My palms are going to dry up and my heart's going to slow down, and I might even high five the dog. Who knows? But this is the feel good, guys. With all that momentum, it's hard not to hit this one when you're taking the right trade. And I'm going to move my stop to break even. I'm going to eliminate every fear that I could ever have so that I can trust that the large chart leads the way, so that I can trust that that momentum will push it down to the next area. And I'm going to wait, and it's either going to get me break even, which is cool, that doesn't hurt, I've already been paid, or it's going to hit the second target, guys. I'm only trading 2 lots. I'm only looking for $200 worth of movement. But that $200 worth of movement creates a $300 winner. And a $300 winner just once every day of the week is a $6,000 month or a $72,000 year. And it's not about hitting home runs. It's not about holding for the distance every time. Get in, make some money, get out. 250 a contract on a 2 lot is $126,000 a year if you can be consistent every day. And that's pretty outstanding, guys. But it revolves around just get your foundation, learn your basics, right? Get to the point to where you can find that great entry so that you trust that great entry, so you never miss that great entry, and keep it pragmatic, keep it very methodical initially. And then the 50-50 trade, that area that might break trade, it's down there too. Because you're going to see that a lot. It gives you the absolute best way to take it. And you're just going to get to the point to where you can look at your chart and go, hey, check it out. Price reach resistance, I'm going to sit on my hands for a minute. Even though price is pulling back to support inside of favorable large triggers, this big red line says just be patient, right? And where we labeled it target, that's exactly where it went. We knew where the market was likely to go. I don't have momentum because my small are inside of the large. My large are flat, my background's red, and I'm right into support with no triggers through it. NASDAQ is saying, hey, Mark, sit tight. It's not time yet. The S&P has given me that exact same information. Hey, Mark, don't trade into all these areas. It's probably not your best bet for success. Sit on your hands and do nothing. So that's our first hour, guys. I do this every day. I talk about this every day. We talk about 3 advantages. Remind you that it's on 2 charts. We embrace simplicity, And now it's time for you guys to start taking trades, taking pictures, posting in the room, getting feedback, because you're going to create recognition through repetition. You're going to get to the point to where you never miss a high probability trend trade because those rules, they are visually so ingrained in your brain that the market feels like it slows down, guys. We've learned the rules. Simulate, simulate, simulate. And then one more message before I take a break. For you new people, it's okay to be new. It's all right to be new. I encourage you to be new because you don't want to be old before you're new. Keep it systematic. Keep it sequential. The first thing that you've got to be able to do is understand up or down. That typically is an 8-second lesson for most people. If the background is green, just look for long trades. And if the background is red, only look for short trades. Look for your rules to be met. Don't just jump in. But if the background is green, this is my look. I should have strong triggers. And if I don't, it means that I have to stop looking for a trade. And if my background is red, I should have this trigger look. And if I don't, I'm not looking for a trade as a new user. But understand that trigger look. Go back and study it, circle it, take pictures, burn it into your mind. And then if I do have green, and I do have strong triggers, well, then I have to have a clear path. And if I don't, I have to pump the brakes. So the third thing that I have to be comfortable and confident with is that termination condition. The easiest way to recognize termination conditions is open up your large chart and see how many times price reached an area with weak triggers or they don't break and the area holds. And what that's going to do for you is begin to give you the realization that these fibs are pretty damn strong, that these divergence lows can change the market. And you'll just say, man, I don't have to trade into those. I don't have to hope that those break because if I'm just a little bit patient, a good top's going to reverse the market and it's going to give me odds favorable momentum. And even at a fib with that much momentum, there may be an opportunity to continue down. There may be an opportunity to take advantage somewhere in between those decision-making points. So get to the point to where you're comfortable looking at these things, understanding whether or not they're likely to hold or break. And then when you're comfortable with that, let's refine it down to entries, guys. Let's go through and make sure that you can pinpoint where the market is most likely to continue. And the easiest way to burn this image into your mind is to go back on your large chart, circle tails when the rules are met. I don't know, Paul. Circle tails when the rules are met. And if that circle on the tail, because we don't trade tails, guys, we trade pullbacks to areas inside of favorable large triggers. If the circle on the tail is a pullback to an area inside of favorable large triggers, guys, that's your trade. That's the one you're looking for. Annotate it with the rules. Write odds favorable momentum. Write clear path. Write pullback to area inside of favorable large triggers. Post it in the room. Even if it's historical study, say, Mark, I'm really trying to get this down. Did I read it right? Am I doing this right? Is this exactly what I'm looking for? And I'll just go to your picture and I'll say, let's see. You did have odds favorable. It had the potential to break. And look how it pulls right back to resistance inside of favorable large triggers. Hey, John Novak, guy that wrote the software, guy that's been trading for 20 years. Way to catch exactly what we teach in the room. Way to take a high probability trend trade, giving yourself the best chance of success. I think it's pretty amazing that you take the exact same trades that we teach new users. And he'll be like, dude, shut up. You're my brother. And I'll be like, okay, yeah, cool. Um, but guys, that's the first hour. Are there any questions about high probability trend trades? Paul, the S&P has the potential to break, right? Smalls are through, large or not. You've already had two divergences that the large triggers didn't break. Are you betting the kids' college fund on that look? Especially when it's been doing that? Maybe you are. Paul's been with us a while. He sees things other people's don't. Other people don't. But you're already at support inside of favorable large triggers. But you've got three areas that haven't broken yet. So we'll see what happens. Me personally, I like a clear path. I love it when resistance holds. Guys, do you see it? We set it, no more trades into that big red line with no triggers. Look what the market did. How many of you took that trade last week? How many of you went long at support hoping that the area would break only to watch it turn against you. Same thing on the NASDAQ. How many of you went long hoping the area would break? But even better, who went long before the area was reached and got paid at the area? I know there's some NASDAQ traders that took that one. And then just waiting to see what the S&P does, right? It's either going to break or it's going to hold, guys. I have no idea. I can shake the magic 8 ball, but it doesn't mean that it's going to go. It's just not my money. So I'm going to drop this in here that says I'm going on break. I'll be back soon. If you have pictures, post them. If you have questions, post them. If you've already posted in the room, well, I'm going to go through those in order, guys. And every time I go through them, we're only going to talk about a couple things. We're going to talk about advantages. We're going to talk about whether or not your picture had momentum, whether or not your picture had a clear path, or whether or not your picture had an area inside of favorable large triggers. If it didn't, it doesn't mean that it's a bad trade. It just means that it's your trade. If it doesn't, it's imperative that you tell me why you did what you did, guys, right? Because this is very much an education class, and I want to be able to give you feedback on what you're doing. I'll always relay every trade going back to these. But I want you guys to understand that it's not your job to be the trade police. If somebody is doing something outside of the best, that's okay. They probably have the repetitions to make those decisions. Always worry about what you're doing, guys. Give yourself the advantage. Annotate those charts. Um, no worries. Andy, we'll do a quick capture annotation lesson when I come back. It's really pretty easy once you get it. And what most people forget is annotation is click and drag. So if you take a picture, I said when I get back, but I can't do that. I have to make sure that I'm on the call out box, left click, drag down. That's it. Oh, you have to go to the dentist. Tell the dentist I said hello. Tell him to be nice to you. But left click, drag down. That creates your box, Andy. And then type. And then so that you can come get it after the dentist, hopefully you're not all doped up. Here is the entire tutorial on being able to use capture software effectively and get those pictures in the room. And then, of course, if you have any questions, we'll get you taken care of. So I'll leave you guys with the S&P, and I'll be back in about 5 minutes. When I come back, we'll start looking at pictures and talking, guys. Back in just a second. Here we go. Let's get into that second round here. So what I'm going to do is I'm going to scroll up to the very top of the room, and I'm going to start clicking on pictures. And we're going to talk about what we see in terms of advantages. We're going to talk about the trade. We're going to read your annotations and see why you did what you did. So Cav is first here. Cav, let's see what you did. So market coming from a good top. The first thing Cav does is he establishes that it was a termination condition that created a full reversal, and he knows that this adds strength to the push. Strong triggers on both charts to the downside. He's using odds favorable momentum. Rule number one. Notice that his large triggers didn't break through the key area yet. And this was one of the challenges, is he didn't have a clear path, but he takes the perfect entry right at resistance inside of favorable large triggers. And guys, I don't think that this entry could be done much better than that. It's the triggers for rock. We use the triggers for termination conditions. Small and large clear the area. The area is broken. Until that happens, the area only has the potential. Here's a picture in the room that shows the possibilities, but price reaches the area. That's what triggers the reaction. But the trigger lines breaking through the area, both small and large, that's what lets you know that an area is broken, not the color of the fib so much. Perfect entry. Absolutely beautiful entry, Cav, coming through. And then you identified your first trouble spot, which is that divergence low. And why are we identifying trouble spots? Because this isn't a high probability trend trade. Because if you look at Cav's large chart, the large triggers never made it through that area of support. Even though it turned red, the large triggers never made it through. So for Rock, there's a great real world example of it. So one loss of momentum coupled with a clear path, he's willing to take that shot because of that great top where it's coming from. Two divergences, and Cav, you'll probably agree with me after the fact, two divergences on a 50-50 trade is a pretty good indication that it may be time to let go, right? And you held on to this one for quite a bit. You turned a winning trade into a losing trade. And guys, this is one of the great things when you know what you're up against, and this is why I'm such a big proponent. If you speak to yourself in terms of advantages, and you can say to yourself going into a trade, I do have the advantage of momentum, and that's awesome because it may push the market in the direction of the trade, but I do not have the advantage of a clear path. The large and small have not cleared the area. Can everybody hear me? Just making sure. Then what it does is it puts that management hat on you. Okay, cool. It says, you say to yourself, you say, hey, I don't have the advantage of a clear path, which means that it's medium probability, which means that I may have to manage assertively. And on those 50-50 trades where the areas haven't broken yet, two divergences can be a killer, right? So two divergences gives you the opportunity to get out break even instead of giving it back. Cav, it was a beautiful read. It was a perfect entry. Little bit of a management opportunity there. But you even put that on there. Great lesson. Awesome stuff. And then E. Webster, first live money trade in 2 years. Back in the saddle. Odds favorable. Everything's going up. Perfect entry at the only area of support inside of favorable large triggers. Quick profits on the way up. And I'll tell you what, taking that exit right at the second divergence high, right there with the small triggers weak, absolutely beautiful. Back in the saddle. Beautiful trading, E. Webster. I know that felt good too. When your first one back is a win, man, just sets the tone. And then John, everything says up, everything is flying. You take the perfect entry. Stop keeps you safe. Out at the first trouble spot, out at the second trouble spot. Nice trend trade, John. And then Cav doing it again. Termination, full reversal, odds favorable, perfect entry. Money, money, right? Absolutely beautiful. Hey guys, I want to encourage you. If you have a question about somebody else's chart, feel free. Ask. There's nothing wrong with asking, especially if it's not a high probability trend trade. Well, how come Cav took this entry right here? The large didn't get above. Well, it's 50-50 scenario, right? And it's coming from a great bottom. No divergence, strong triggers, tiny little window of opportunity. That's everything you look for. Cav has studied this long enough to say, I will never miss this look. And he's been with Nexgen long enough to know that that's a great place to get paid on the first one. The second one, it was kind of on its way to continue up there a little bit, but absolutely beautiful. Nice trading, Cav. And then Andy, I think he's at the dentist. He re-annotated for us. So we'll scroll down and see the next one. And then E. Webster, taking the one that we did the bar by bar on and absolutely nailing the entry, right? Able to get paid because of the entry. Quick profits. Third divergence, didn't give anything back. Was that your second live trade, E. Webster? You are killing it on following the rules. You're killing it on giving the advantages. And you can feel the calm on your management there. That exit is perfect. Just keep doing it, man. I'm going to miss you when you leave my class, but I'll be excited when you fire me because you don't need me anymore. And then got in here. The smalls didn't break the mid band yet. The 5-1 still red. Breaking rules, and you got lucky. Yep, just a lot of trouble to get through. And I'm assuming you got in down here fighting everything. And we'll talk about that one later. I know he's at the dentist. That'll open up a great conversation on the gap theory. All right, Miss Cindy. Entry point. Why? Why'd you go short, Cindy? Did you go short because you're coming from a great termination condition? Or that you had odds favorable momentum? Or even though there was a little bit of trouble beneath you, you had a no divergent strong trigger pull back to resistance inside of favorable large triggers? I'm just guessing. I love your entry. That's about as beautiful of it as it gets. And Cindy, I know that you're getting back into the swing of things and you clearly know how to read your charts. It's awesome though. Keep reaffirming why this trade was successful. Keep talking about why it was doing what it did. And just from a management standpoint, I know that you're a tick below that divergence low. You're still directly in determination conditions here. It's okay to take a little money. It's okay to get there and get that stop a little closer to break even, right? No reason to hope. From 76 or from 46 to 41.25, that's a $12 difference, but it has you getting out at trouble and not hoping that trouble breaks. Does that make sense? Wouldn't it be horrible if that pivot stop out at support with no triggers through rocketed the market up and you missed it by a tick and your stop was all the way up there? At this point, when you don't have a clear path, it's okay to get paid. And a lot of us have very set numbers, right? Well, my profit target is 10 ticks. Guys, if 8 ticks is more appropriate, take 8 ticks. If 12 ticks is more appropriate, take 12 ticks. Does that make sense? But do you see how there's a wall of trouble? Get paid at it. Great trade though. Beautiful trade, Cindy. Just using advantages. Remember when I said that strong triggers, terminations, guys, it'll change thought processes. And when the entry is perfect, it helps you kind of bypass a little challenge there. Really well done. Odds favorable, everything down. There it is, guys. Just doesn't get easier than that. You guys are proving that. This isn't me telling you that these trades exist. This is you guys showing me that these trades exist over and over. And then Joel, 50-50 trade, right? So what does that mean? This is where I like to break down what it means, guys. 50-50 means that I don't have a clear path. I know, it's other Joel. Other Joel. I love odds favorable momentum. That is such a great look. That's all right, Joel. That means you made it. Congratulations. Odds favorable momentum is an awesome look. But 50-50 tells me that I don't have a clear path. So I gave myself a little extra room on this one. Um, and this is where that line of thinking comes in. 50-50 means I don't have a clear path. One of three of my advantages are gone. And that's okay. It can still be a great trade, right? It just goes into that medium probability. One divergence, whoops, sorry, can hurt a 50-50. And that's okay. You took the perfect entry, right? But we're still waiting for the area to break. For me, visually seeing that second divergence is a deal breaker. I would never enter on a second divergence. And guys, I don't know if you guys will. Some of you will. For me personally, two divergences on a 50-50 says no way. Joel, what does your plan say about two divergences on a 50-50? And we're going to use the logic for a management standpoint. If your plan says no, if your plan says I'm not doing this, I'm not taking this trade, then that typically becomes an exit condition. Um, if one divergence is okay to still get you in, but you're like, yeah, if two printed, I wouldn't take that trade. It's okay to exit with that second divergence. You get out of this trade almost break even. Um, and it looks like you were in at 97. No, you were a little higher. So it never made your $100 target. I think that the idea for me, you broke your plan, that's okay. And you're okay with one divergence with market flow. I got you. You never got a signal for market flow. You just had an HVA line there, but that's okay. That supported it. It got you in. That was great. Knowing what you're up against makes it easier to manage, right? But market flow is a confirmation for me. So I like your entry. I think your entry is great, and I don't think I had a challenge with that at all. And then the second divergence should have been your reason to exit. Absolutely. So what I would do, Joel, and this is just me, and guys, you don't ever have to do what I do. Most of my friends would tell you that's pretty smart. If I break my rules, instead of putting support didn't hold and stopped out, I'm going to write on the chart. Broke my rule, should have exited with second divergence on a 50-50. And all this is doing, guys, you're not shaming yourself or ridiculing yourself. You're not beating yourself up. What you're doing is you are verbally and physically typing out. You're reminding yourself that your rules say two divergences takes you out of this trade, right? And even though in the moment, the adrenaline, you stayed in, if you take the time to type this, I broke my rule, I should have been out. And Joel, I apologize if this feels like I'm beating on you, but I'm not. I'm just, it's a perfect picture. It's an awesome lesson. Instead of writing support did not hold and stopped out, right? What you've done is you've taken the responsibility off of the support that didn't hold and you're placing it on you and your ability to follow rules. So just a little mental verbal trick there, guys, that really does help. Yeah, if it was all roses, you know what you did. So it's a great picture. It's an awesome entry and it's a management opportunity. And we talked about that earlier today, how management's really the second piece of the puzzle, guys. Um, you guys are nailing beautiful entries. They're awesome entries. And then we're just looking for those opportunities for management. And then um, beautiful trade, right? Cindy, that was your short. C-Dub, just missed it, huh? This is what I always ask. Did you miss it because you overthought it, or did you miss it because maybe you were toasting a bagel or something, walking the dog, taking a shower, coffee kicked in, and you were indisposed? And that happens, guys. You'll come back and you'll see trades, and you'll be like, "Dag, nabbit, not paying attention." Okay, so that's legitimate, right? That's a great reason to miss a trade. You're not paying attention. Maybe you're looking at a different market. If you were sitting in front of this trade and you missed it, then it would be a different conversation, right? Because then you'd have to go through it. I had a 50-50 and I had no divergence and strong triggers in a tiny window. What talked me out of this trade? And I know that you didn't get talked out of this one, C-Dub, but was there something that you saw that kept you out of this trade? And if you miss a trade and you write your rules on it, and again, I'm just taking y'all's pictures for great lessons, guys. If I come in and I write on this chart, this came from a good top, right? And I write odds favorable momentum. And I write 50-50. So I know exactly what I'm getting into, so I know whether or not I have to manage. And then on my small chart, I write no divergence, strong triggers, small window. And I go through all this. And guys, this is on the assumption that I was looking at this trade and I chose not to take it. I decided that it didn't fit my rules. If I take the time to go back and look at these, to annotate them, to go through, I say, well, wait a minute. This fits every one of my rules perfect. And this is a 100% from the KISS plan, high probability or medium probability, best of the best 50-50 trade. And I was supposed to, per my plan, take this entry, but I talked myself out of it. And I was supposed to, per my plan, take money at this line. Then what you've done is you've just kind of gotten that lesson in there as well. And C-Dub, I know you didn't miss this one because you got scared or worried or anything like that. But if you miss a trade, go back and still go through the process of annotating. Remind yourself why that trade should have been one that's in your P&L for the day. And then John Novak, not the best trigger lines, right? But the path is clear. Little entry, just a trend trade, guys. Every trigger line above support, support's likely to hold. John knows that with everything going up. And he says, let's just go up with everything else. Nice trade. And then Cav says, if John can do it, I can do it. Beautiful. Took the pullback to the fib mid-band triggers and got out before the one-to-ones. Little chunks, right, Cav? Get in, make some money, get out, wait for the next one. C-Dub. Weak triggers on a 50-50. Got in based on a clear path, almost got stopped out, went anyway. You did get stopped out. So it's not a clear path. I love that. Based on a clear path, almost. Hey guys, this is why I think when you annotate your charts, it's so important to identify things. It's a 50-50 all day, right? That's a 50-50 all day, C-Dub. That's a divergence high. Large triggers aren't through. And the idea on 50-50s, guys, is that this is your trigger look. That huge separation between the small and the large, that odds favorable momentum, that best of the best loaded down freight train going 100 miles an hour, and if a cow gets on the track, it's the poor cow, right? Guys, that's what breaks areas. That's what breaks these key decision points. Weak triggers aren't your best look. And what happens with the weak triggers? Pushes all the way back to the mid band, right? Does that make sense, C-Dub? This was you, right? And then C-Dub, I want to go to one thing on NASDAQ trading that's very, very helpful, and I don't know if you've done any study on it yet. When your small triggers are coming down this strong and they're less than a bar away, when you get to the area, it's better just to wait. Fighting these small triggers, they'll behave as resistance very often. Fighting these small triggers is difficult because they can create bounces, and you see it a lot. And if you go through my spreadsheet on the third tab, there's some pretty good ideas on the NASDAQ. If the small triggers are a full bar away, I'm getting in at the entry. I'm getting in at the area. But if the small triggers are less than a full bar away, I'm not hopping in at that mid band. Well, that's almost the same trade because they're likely to push down. Does that make sense? That's a pretty good lesson for NASDAQ. The large chart rules are the same, but if you start creating an awareness of what the small triggers are on the 13.2, it's going to help you NASDAQ traders a lot because remember, this is the 13.2, right? Not a 5.1. It's still a pretty big chart. And that's a lot of momentum that comes with those triggers, the same way we use it on those slower markets to get us into the market. Um, Thanks for posting that, C-Dub. Ron says he's just having fun, which means that when the market has overwhelming momentum and there's nothing in between him and his target, he's just going to make some money. On simulator, nothing wrong with simulator, guys. Best lessons I ever got have come off a simulator. And then who is this? This was Cav again. Cav, odds favorable, everything down, no divergence, perfect entry, money made once again. And Cav, I notice you're on Sim too. Did you hit your goal or are you taking a day off? The way you're trading, I'd say you hit your goal. Absolutely beautiful, guys. The advantage of momentum. I cannot oversell it. The advantage of momentum. All right, Joel. Odds favorable. No clear path, so it's a 50-50. And it does pull back. Odds favorable. No divergence on the 5-1. You put yes, but it was a no. You did have divergence. Looks like you're coming from a good top. Could have taken a shot at that one because of the good top. Sometimes that negates one divergence. And down it goes to support. And that's okay that you missed this trade because you went back and you annotated it and you talked about it and you're good. Nice job, guys. Way to keep me busy. That's all the pictures we have. What's the S&P doing? Paul, it broke out right to Fibonacci resistance, didn't it? None of the triggers broke. Divergence is printed. Guys, this is the fight that you can avoid. All this up and down on the small chart, all this indecision, all this fluctuation, this is what rule number 2 keeps you out of. It's a great visualization of it right now. Areas hold, areas break all day long. If you just wait for that clear path, life tends to get pretty easy, right? All of you took this one. Most of you took this one. And then you come down here and you get some wonky weak triggers. And you get divergence and no momentum. And look what happens, guys. It just pushes further up. It doesn't mean that the trend is down or over. Who took the short outside of the large triggers? Who said, man, I feel like my path is clear. I'm going to take this short and hope for the best. Anybody? I would have at some point. And then I would have taken it again when it started to go down and I got stopped out. And I would have taken it again because, man, it's red. Then I would have taken it again and gotten stopped out. When all I really had to do is just be patient and wait. Wait for the best of the best. Wait for those advantages. Loss of momentum, right, David? This was a little, this was a pretty cool thing that John Novak did for me one day. Is we were just sitting around and we were talking about, that's where you were frustrated, Michael? Why were you frustrated? And if you're frustrated, post in the room. Show me why. So check it out. Best of the best, there's a tail, up it goes. Best of the best, there's a tail, there it goes. Weak triggers, bigger push up, right? Weak triggers, bigger push up. Indecision, not a damn thing to do. Strong triggers, tails, up it goes. Smalls return to the large, that precedes the reversal. Weak triggers precedes the reversal. You guys remember this lesson? When the small return to the large, the momentum's going away. So if you look for your opportunities with the best of the best momentum, it just, man, your chances go up exponentially. Weak triggers, there's a reversal. Indecision, it goes nowhere. Weakened triggers, bigger push. And this is without the benefit of areas, guys. I always encourage people, develop your trust in momentum first. Develop your trust in the idea that when you have the absolute strongest triggers, your chances of success go up exponentially. And what it does, Michael, is it gives you the idea that absolutely this thing's more than likely going to continue down, where this pulls that confidence away. And all you have to do is say, weak triggers. And then it's coupled with divergence. Not my trade. Minimal losses are great, though. I love minimal losses. But you see this all day. I love looking for trades, right? I love, where is that one? 1026. I love odds favorable, clear path, pull back, go, right? Even with split triggers, it still comes off of resistance inside a favorable large. It goes all the way down until it gets ugly. So I'm a big fan, guys. Momentum is freaking amazing, isn't it? This is the NASDAQ again. Right to the termination condition. All you're doing is developing trust for your first couple months, guys. He told me that weak triggers are a disadvantage, C-Dub. That strong triggers break things, that strong triggers break areas, that strong triggers move the market in the direction of the trend, that strong triggers create a huge advantage that weak triggers don't. He told me that when they get weak, anything can happen up or down. When they return to the large, they're losing momentum. And guys, I'm telling you, momentum is freaking amazing. Momentum is killer. And sacrificing momentum, I think, is one of the biggest mistakes that you can make. Holy smokes. Michael, everything says down, you went short, you got paid, you got paid, you got paid. Everything says up, you went long, you got paid, you got paid, you got paid. Everything said down with momentum, you get paid. Went long without momentum and lost. Pretty cool. Went short without momentum and lost. Every 2 hours, Farrakh. Do you see that, Michael? This is pretty cool. These are the things that excite me. And I know that I probably get excited way too easy. Down with momentum, easy winners, right? Up with momentum, easy winners. Down with momentum, easy winners. No momentum, a bit of a butt kicking. No momentum, a little bit of a butt kicking. How easy is it to recognize a pattern? No, it's not all bad at all, Michael. It's great. So what you did is you recognized what makes it easy for you to win, and you're beginning to recognize what makes it difficult for you to win. So write it down on a piece of paper in front of you. Um, and it's going to help you a lot. It's going to give you a great opportunity to eliminate those small mistakes so that you can have a lot more of that money in the bank. Awesome picture. Thank you for sharing that. And then C-Dub, this just reinforces what my brother told me. Strong triggers kick ass. Oh, you're fine. One thing you can do though, everybody, when you're taking a picture, is I don't need to see all of that to look at your long trade, right? Make it an easy book to read. That's the perfect picture. And then when you take the picture, that's plenty, right? That's all I need. So it stays a little focused because all of this nonsense means nothing to me, right? And what happened after divergence at a fib means nothing to me. So why not just capture that beautiful picture? This is my look. Eliminate the noise. Eliminate the noise. Jose, I have no idea what a GTC order is. Um, good till close. Good to cancel. Good till canceled. Good to. So apparently everybody here is smarter than me, which I love. Good job, guys. I have no idea. I don't know how to use it. I don't know what it's used for. And then market if touched is John talked about that yesterday. Um, market if touched is what John's using on those replicating software because it keeps something from hanging orders. And I'm sorry I'm not more help. I use limit orders or buy now, sell now. That's all I use. Um, so for me, it's just, yeah, I don't, I wish I knew. I bet if you asked in the trader's room, there's guys that study all this stuff that could give you a better answer, or maybe John will come back in and give a better answer. Um, the limits are great. I love limit orders. They work just fine. So NASDAQ, that was a 50-50. The large triggers weren't through yet. Look at that. One, two, three, four divergences, weak triggers. We're back. No reason to take that long. And even if you were hell-bent on taking this long, C-Dub, I think we saw this earlier. Look at the small triggers. I'm not fighting those. Not a chance. No way. If I want a fighting chance, look at that. I'll wait for a close on the correct side. It doesn't mean that this is a rules-based trade, but it means with everything up above the areas, I at least waited for things to get above. I waited for it to get on the correct side of that momentum indicator. And obviously I'm in super late just for the lesson. But if you were still going to take that long because of the trigger line position, at least not fighting those triggers, waiting for the close on the correct side really helps a lot. You just made some fake money on Rule 101 basics. Rule 1, momentum. Momentum's, guys, that's it. Momentum's amazing. But do you see how that worked, C-Dub? All my NASDAQ traders, the large chart set up. The large chart had a clear path. The large chart even had pretty good momentum. If I don't fight those triggers and I have maybe a stop in on the close on the correct side, guys, I'm going with the large chart. That's a great tool to use. I have a lot of respect for those small triggers. And then Cav exiting along. and then getting back in with momentum and a clear path and taking it off at the trouble spot. Beautiful, Cav. Area inside of favorable large triggers. Price didn't reach the fib. The momentum is the absolute best. We're coming from a termination, and it went right to that fib, right where the momentum said that it was going. Freaking amazing. So guys, we've seen what about 100 times today that this works, right? That these patterns repeat themselves. We've seen it on the NASDAQ. We've seen it on crude oil. We've watched it on the S&P. So you've got the tools that you need. You've got the methodology that you need. You've got the software that you need. You're getting the feedback that you need. The only thing that I can't give you, the only thing that I am unable to provide you is experience. I can't give you repetition. I can't make you take pictures. I can't make you annotate charts. I can't make you participate in class. So that's on you. I'm going to keep talking. I'm going to keep giving feedback. We're going to keep looking at the live market and just kind of analyzing what's going on. But guys, if you really want to be a day trader, if you really want to quit your job, if you really want financial independence, if that really truly is your goal, this is just like anything else in the world. You're going to get out of it what you put into it, right? You're going to get out of it what you put into it. If you take a bunch of pictures, if you participate a lot, if you do market replay, if you commit to your rules, your chances of being successful are much better than the person that sits on the sidelines and goes, well, this just sucks. I can't figure it out, right? I can't see your face. Well, I can see a couple of y'all's faces. Good looking bunch. But if you don't participate, I can't help you. David Bow, you look like you have a horse. Oh, no, that's the horse you're on. Never mind. We're good. Jose DeP is smiling. Cindy looks serious. E. Webster looks professional. Jose's a couple drinks in his face, smiling. So, it's hard, guys. It's hard to participate. It's scary to participate. It's very nerve-wracking to place a losing trade. Anything but professional. You and me both. It's very nerve-wracking to put a losing trade in the room. It's very nerve-wracking to admit to the world, oh my gosh, I'm wrong. I made a mistake. I'm brand new. I know it is because I avoided it. And my avoidance of participation, guys, my avoidance of taking pictures, my avoidance of using the spreadsheet cost me 5 grand in one day. It cost me $5,000 in 21 losing trades that I had absolutely no idea why I lost. Change your name. Cav's name is Aloysius, but he refuses to post under Aloysius, and he made up this Cav because he's a cavalier kind of fella. None of you guys are going to recognize him in the grocery store. None of you guys are going to send him Christmas cards. Nobody's going to see him and go, oh my gosh, there's that dude that posted the loser in the Nexgen room, right? So if it makes you feel better, change your name. He's become she's become he's. Haji, good top, 50-50, right? Smalls are through, large are not. Does divergence rule out a 50-50? Great question, Haji. Does your plan say don't take 50-50s with divergence? Do you see how I'm turning this back around on you? Does your plan say don't take a 50-50 with divergence? Well, then there you go. That wasn't your trade. How easy was that? And you know what sucks, Haji, is you have to be okay with whatever happens after. But because you posted in the room, because you ask great questions, we can talk about a couple things. It really can be that easy, I promise. So let's talk about where it came from. The market reached a key Fibonacci area, and even with all that divergence, it didn't go a tick higher. Stop that thing to the tick, right? That termination condition created a full reversal. It is a good top. Great read, Haji. When I have a great top, it means that the buyers have done all they want to do and the sellers took over and they're starting to push, which means that these pushes down have a little more oomph to them. Do you see the momentum that you have here, Haji? That's about the best look. I don't think I've ever seen trigger lines further apart. Would you agree? So what we're going to do is we're going to give you the next step in your plan. For me, personally, if I'm coming from a termination that creates a reversal, if I have the absolute best trigger look that I could ever hope for in the world, if I have strong triggers on my small chart, if my window of opportunity is so small that I can have reasonable risk, what I consider reasonable risk on a trade, for me personally, with all of those put together, I'm willing to forego one divergence. I'm willing to not worry about one divergence. Two divergences is a reason for exit. But one divergence, I'm still willing to take the trade when I have all those factors. For the brand new user, and let me go to my disclaimer, guys. For the brand new user that's following the KISS plan, it is very clear that you must have both for your best chance of success. It is black and white. Divergence screws it up. Divergence hurts you. Divergence is bad. Divergence is horrible. Why do I say that? Because the KISS plan is designed to optimize your chances of success, to take the need to piece together your chart reads to make an educated decision on whether or not it's worth it to take that risk. Does that make sense, everybody? That's why we put stepping stone. So Haji, if you're following the KISS plan, you're committed to the KISS plan, absolutely not. Don't take that trade. It breaks your rules. Fantastic job doing nothing. But what you're going to find is that good tops and bottoms create a pretty kick-ass advantage. And you may find yourself taking that trade when you grow as a trader a little bit. I hope that was helpful. The read was perfect. Does the red fib count as a termination condition? It's 50-50. It doesn't matter if it's red or blue. Where are your trigger lines? Does that make sense, Haji? Doesn't matter if it's red or blue. Where are your trigger lines? And let me expand on that. I want to show you guys a cool trick. I love blowing up your pictures and taking pictures. There we go. What color is the line now, everybody? It's black, right? But no matter what color that line is, it's still a 50-50 trade. The area is not broken. Don't get caught up on colors. There's nothing in my rules, nothing in that KISS plan that talks about the color. The magenta 1-to-1s, nope. So Haji, when I teach entry areas, fibs, midbands, yellow 1-to-1s. These magenta 1-to-1s are small time frame swings. They're everywhere. If they line up with an area, it adds a little support to that. It helps a little bit, but on their own, absolutely not. But let's talk about the idea of what these trigger lines are, right? They're moving averages. So Haji, if I'm a tick or two below the moving average, I'm expecting the correction to the triggers. The lines give me a bounce point. I'm okay if I'm a tick or two below them. What I don't want to do is be a tick or two above them. I don't want to be beyond that correction point. Great picture, man. Great read, awesome read, and more than anything, way to stick to your plan. Guys, your plan's going to grow. It really will. Got in with strong momentum and made fake money, C-Dub. So you're saying with odds favorable momentum and a 50-50 and no divergence and a pullback to support, see how it's a tick or two above? You're saying that that's a pretty easy look to make money with? Momentum leads the way? That should be on a coffee cup. Momentum leads the way. Momentum rules. Momentum is awesome. I'm telling you guys, there are plans built around momentum. Ron C. There are plans built around the advantage of a market that's likely to continue in the direction of the trend. took the Roadrunner slingshot trade. I've never heard it called the Roadrunner slingshot trade. Cav, do you mind if I analyze your chart for the classroom and show them what you mean? I know you're just having a good time here, but I think there's a beautiful lesson in this one. So guys, here's your fib, and all your triggers are above that fib, right? No short trades, even though it's red. That's a huge part of what Cav's looking at here. Is Cav says that the laws of termination conditions say that if price comes down to this and all the triggers remain above, shorts are suicide. But what he also did, and this is, I love that you did this. It's just so good. A little divergence pushes us to the mid-band. Do you guys remember that conversation? We were talking before. If you get a bad top, if you get a mid-band, or if you get a little pivot from the middle of nowhere, divergence isn't a termination condition, guys. It's just a loss of momentum. If you get this pivot from the middle of nowhere, this mid-band becomes your first target. That's probably the bounce point. What Cav did is Cav said, when price reached this mid-band, well, it also lined up with some one-to-ones, which I like. That gives me an area for bounce. And then what he noticed is that his large triggers are more than a full bar away. They're above that reversal bar. This is what we call the gap theory. And guys, I'm not going to lie. If you try to just trade the gap theory, you're going to lose more than you win. You really are. Until you really get some repetition down, fighting these triggers, fighting this trend, it's financial suicide. But when you start getting repetitions, what you realize is that if price accelerates, this looks exactly like your trade, Cav. If price accelerates away from the large triggers so fast that it creates a gap bigger than a bar and hits an area, it's likely to close that gap. Same thing. Let me not stack pictures too much. If price accelerates away and the large triggers don't follow, it's likely to close the gap. This is the gap theory. Cav just nailed it and took advantage of it and was able to capitalize on it. But you have to fight direction. You have to fight momentum, guys. There's a lot that can go wrong with these trades fast, especially if it's coming from a good bottom or a top. And if it's coming from a bad top, when it closes that gap, sometimes it likes to continue in the direction of the underlying trend. And Cav, you just did a great job not being greedy, waiting for a close on the correct side, saying I can make a little money like this. I can see if it closes the gap on those triggers. And that was NASDAQ, right? And look at that, guys. It closed the gap on those triggers and then continued up right to the termination condition. So Cav knew not to go long on that one or this one or this one. He waited for it to come back to the midband because of the divergence. Guys, this is chart reading. This is pattern recognition through experience. The cool thing is every one of you has the ability to do this. Every one of you has the ability. Typically on this trade, the safest way to take it is for you to have an even higher time frame that has this look. And then this just becomes a trend trade, and you look for your entry on a smaller, faster chart. So, Cav, you did it about as well as you could have done it. It's still an aggressive trade. It's still aggressive against triggers. It's still aggressive against direction, and it fights everything. But when you start learning a little, when you start taking those pictures, you start recognize patterns, and you'll be amazed at what you can capitalize on. And then E. Webster, odds favorable, clear path, perfect entry, 3 divergence. Did you mean to post that one again? And you said you didn't trust the large triggers to stay in. No, that's okay. I just wanted to make sure. I love this one. I love the adherence to rules on this one. In E. Webster, this is one that eventually you'll hold. You'll be willing to die rather than you'll make them come get you. Smalls are returning to the large a little bit, right? It's going. News is coming out. And your area is beyond the window. Um, I love your exit. And this goes back to talking about the correction, right? Talking about the moving average correction. The expectation is to correct to the moving average. Does that make sense, everybody? Your triggers are the moving average, and that's one of the reasons why we look for the areas inside of them. Because we're expecting price to snap back the same way it does on the large chart. So when you start getting areas beyond, is it going to be that mid band? Is it going to be this fib? Is it going to come up to this mid band? Is it going to retrace to these 1-to-1s? Without the best momentum, with the areas on the other side, this is a lower probability trade. You do have a clear path. The momentum appears to be there, so it's worth taking a shot. But I think managing aggressively isn't a bad idea when your areas are on the other side, because you are beyond that correction point. I personally don't care for trades on the other side. That's just me, though. And then, was that crude oil? So weaker triggers, sure enough, it came all the way up to resistance, right? Is that the same trade, or was this your trade? I'm not sure which trade was yours. Maybe I'm missing something. There it is. See, wrong side, correction point. Tick, 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 tick. You just don't know. Where's it going to go? Hell, I don't know. And then if you wait for everything to agree again, it gets easier. Yeah, I gotcha. I gotcha. I think this was yours right here. That was your entry. But I think it's a good lesson on what those trigger lines mean. And mine may look a little bit different than yours, but it goes back to, that's not it. Well, it's still a good lesson here, though. Let's use it. Yours was later. If they're on the wrong side, is it going to be that mid band? Is it going to be this mid band? Is it going to be these 1-to-1s? Is it going to be here? Is it going to be here? Is it going to be here? And the lesson is still the same. When I get to the wrong side of those large triggers, it becomes problematic. And then that was yours right there on the other side of it, right? So if you took the mid band, how do you determine your stop? In divergence prints, and then it bounces off of 1-to-1s, and you get that indecision again, and now everything starts to line up again. So the lesson's kind of the same. Without the momentum, you can get a bigger push. And if there's no areas in that correction zone to give you a bounce point, you don't know where that bigger push is going. So it's kind of the same lesson twice. Yeah, and you caught it. Well, you caught it right at the end of chop, didn't you? It had already chopped a little bit once, tick, 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 and then it breaks and then gives you that pullback. And it just, yeah. I think it's a good read. And I think just when you know what you're up against, guys, it makes it easier. So Joel, you're starting to get a clear path. The smalls are outside of the large still. You're just waiting to see if it comes together for you, huh? Just waiting to see if it comes together on that ES. I like pre-trade pictures. Did you take it? That's what you wanted, right? Smalls outside of the large, everything coming up, pull back to support inside of favorable large triggers. Oh, that's the NASDAQ. Sorry. Ah, hit that darn termination condition. Just not your money. It happens. Guys, I'm going to take 5 minutes. I need to stretch my neck out a little bit. When I come back, it's up to you. You guys are going to dictate what we're going to talk about. I need you to tell me what we're gonna focus on. So if there's something that you've been wondering, working on, now's your chance to post it in the room. I'll be back this way in just a few minutes, guys. Get into this last 30 minutes or so of class and see what we can do. C-Dub got us going with a picture. And C-Dub, remember that conversation that we just had about the gap theory? Rule number one not met, rule number two not met. What were you thinking? You were thinking, man, I sure wish I was in a trade. That's exactly what you were thinking. And the reality is, C-Dub, is we all think that sometimes. We all think, man, I sure hope this goes down. I sure want it to go down. And there's a couple different things going on in this picture that I think will be helpful for newer users. So thank you for posting this one, right? The gap theory first, if price hits that midband, large triggers don't follow, it's likely to close that gap. And sure enough, it did. Not coming from a good top on a 50-50, problematic. And then, guys, you remember the talk on split triggers? When the synthetic and the large aren't one on top of the other, that advantage isn't quite there. That one came into play on that one too, C-Dub. And man, I'll tell you what, it's okay. It happens. I love that you're on the demo account, not a live account. These are the mistakes that you have to make. You have to do these because everybody's going to make mistakes. Everybody's going to get in there and be like, I'm going to be the best trader ever, and you're going to do something. And even while you're doing it, you're going to be like, damn it, this is stupid. Why am I doing this? Oh yeah, I'm doing it because I hope I win. Um, Maybe I'm the only person that's ever done that. But making these mistakes and then taking the lessons out of them, right? Gap theory alone is enough. Um, Hoping stops. Well, maybe if I put my stop way back here, I won't get stopped out. So, C-Dub, thank you for posting that. Pretty painless to post these. And you took two separate trades with a pullback inside of favorable large triggers. I love it. You take the first one down here. That was kind of a short one. Divergence gets you out of it probably because it wasn't perfect yet. Then you take the momentum style. And then you take another momentum style. Cav, you are putting on a clinic today, my friend. Nicely done. And then E. Webster, anything can happen triggers. You take the short. It's inside of favorable large triggers, which gives you time to react with that loss of momentum. Great management. Solid management, E. Webster. When you know you've lost the advantage of momentum on the large chart, you let it being mirrored on the small chart give you a reason for exit. And it costs you a tick, maybe break even, but you're still able to make money in the moment just from great entries. So I think that's a great takeaway for you guys. The one thing that you'll notice on the people that are showing the most winners is their entries are solid. Their entries are low risk. They're high probability. And E Webster, that's amazing. First day back live and you hit your goal. Let's do that every day for the rest of your life. Let's get you out of that suit and tie. I want your next picture to be in a Hawaiian shirt holding a pina colada. Real or virgin, doesn't matter. Nobody knows the difference. Great stuff. S&P's just in a big old grind. Crude oil, they're killing it, but they're not making it easy, right? You can see that fight all the way down. That's only you on Sundays. And then the NASDAQ just working its way up. They notice the difference when you drink them. Amen, Gina. I usually go into diabetic shock before I get drunk on pina coladas, but I sure do like pina coladas. I think you can change your profile picture. If you go to the bottom right hand corner where it like shows, let me take a picture. It's on the other Discord. It's not in this one where it has the whole lineup. But if you go down here, I think you can click on your profile picture if you want to change it. There's the edit. You click on your profile picture, and then you go to edit, And then I think you can change your picture from over there. That's one of those just kind of play with it. Yeah, me too. But you guys aren't asking questions or posting pictures, so I figured I'd go do a little research for you. What do you want to talk about, guys? Do you want me to get all preachy and soapboxy and talk about the path to success and how it's just not that hard if you give it a shot, guys? Your experience versus time. When you get the software and it looks like fun, we've all been there. And then you're like, whoa, this isn't as easy as I thought it'd be. It turns out if I want to make $1 million a year, I'm going to have to learn something, right? And I start learning it, and I'm not sure what I'm doing, but I'm having a good time. I'm following a checklist. Stuff is good. Yeah, 30 days in, I'm brilliant, right? This is where we all go live, guys. This is where you people are like, I don't want a prop firm. I'll trade my own money. That's what I did. And this little snippet here, that's the Mark Novak story. After you lose $5,000 in a couple hours, you need to tighten up your plan more than you thought. You need to focus a little bit. You need to participate. You need to go through the process. And what happens is that $5,000 or those first couple Apex accounts blown, guys, it's dejecting because what happens is you stop asking for help. When you decide that it's time for you to go live, you quit posting in the room. You stop showing me what you're doing. You quit asking for opinions on things. And you just take your ass kicking and you assume that you're perfect and doing nothing wrong and it must be the market, right? But if you start posting in the room, especially when you go live every trade, what you find is that you keep getting better and better. And when you hit this, pardon my French, I don't know shit stage because you just got beaten up, you just blew out accounts, you just lost money, and everybody goes through it because we're all human. This is where you have the opportunity to make the choice, guys. This is the crossroads. And you either follow the path to getting to where you want to be. This was my personal crossroads. When I hit that point where I was ready to quit Nexgen and I thought, man, I'll never be able to do this and this sucks and I suck and this is no fun, that's when I buckled in and that's when I really started participating in class. And it was amazing how quickly I recognized what was hurting me from the feedback from my brother. Um, and that's when I really started using the spreadsheet, not just taking pictures because I was told to take pictures, but really annotating them, really talking to myself on them, really letting myself know what was good and what was bad, and whether it fit my rules or whether it didn't, and a lot of historical study. And guys, that's where it gets easier. And then you start this upward trend. And the cool thing is I've seen all of you do it. I've seen all of you guys go from this is so freaking hard, I don't know what I'm going to do. And now suddenly you're making money every day. You're consistent. You're hitting your goals. You're feeling good about it. I remember when you older guys were new and you were just as confused as the new people are now, but you stuck with it and you persevered and it's reaping rewards. So stay the path, guys. Three divergences in the same location says don't do it, right? Have we heard that before? Three divergences can show change. Weak triggers can precede a reversal. Odds favorable is the best of the best. But it's a 50-50 trade, which means that if I'm going to activate a limit order here, that is so loud. And divergence prints, then I'll probably cancel it, right? It's pretty awesome. It's fun. I don't know about you guys. I have a blast doing this. I have a blast teaching the class. I have a blast looking at your progress. I have a great time watching you guys get better all day. And I really do. I look forward to the feedback. I look forward to being able to help you guys out. It's a real kick for me seeing the success that you guys have. Let's do this one. We haven't done this one in a while. For you guys that are growing, I know this is usually people's cue to jump ship, but 6 signs you know you're maturing as a trader. I like to do this one because I think that humans, just as a whole, tend to not celebrate their victories. They tend to not recognize advances. They only recognize problems. And I don't know why people are trained to do that. I'm such the pain in the ass optimist. I'm always looking for the good. But I know that that's not normal. So when you start recognizing these things, you know that you're on that good path. And it starts with managing risk before you manage reward. And that's what Nexgen does for you with the methodology, with the tighter windows of opportunity, with the smart stop placement, with the recognition of problems. You find yourself focused on managing the risk of the trade, and then the profits tend to follow when the advantages are there. You find yourself relaxed when you're taking trades. I used to scroll my charts and sweaty palms and racing heart, and I used to mumble under my breath taking trades. And now I am so calm. And when I talk to myself in a trade, I talk to myself about the advantages. Oh, did you change it, E. Webster? No, I got to see what it is. And it's not going to let me. I'll leave it alone for a second. When you don't force or chase trades, when you're okay when it's not your money, guys, that's a big sign of maturity because what it means is there's an adherence to the plan. If your rules say small chart has to be red for me to take a trade, and you never take a trade with a green background, then you're following rules and you're not forcing or chasing trades. And you're not getting your adrenaline fix out of it. You're not messing with it. Man, I can't click on it. My Discord seems to be messing up. Can you guys still see it? Hopefully. When you follow your trading plan, that's a big part of it, guys. When you literally, and who did that earlier? Haji. Haji said, "Man, these are all the advantages, but this divergence breaks my rules, so I'm not taking the trade." And then it went down anyway. And I'll tell you what, that is where a lot of people will go, "Well, it went down this one time, so I need to always take that trade." Rather than saying the 38 times before that it lost. It's like that one great golf shot that gets you buying new clubs because you know that you can just be great at it. If you can hit that same shot every time and then you shoot 127 next time you're out. And then my favorite one, because I'm kind of a hippie, your worth as a trader and your worth as a person are two separate things, guys. When you realize that bad days don't make you a bad person, that bad trades don't make you a bad person, that not following your rules doesn't make you a deviant or a sociopath, it's just a part of being human. And you can still be the most lovable person in the world and have a bad day trading. So don't let trading rule your emotions. Don't let trading have anything to do with your self-esteem. Bad days happen, great days happen. You're not miraculously a saint if you make $1,000, right? So you're not a bad guy if you lose it. So I always like that one. Maturing as a trader. There's your checklist. There's that 50-50 with divergence. Haji said, not for me. Not happening 50-50 with divergence not coming from a good top. Ha, fool me once. Great job. Terminations. No, thank you. Big old termination. No, thank you. You guys ever look at three different markets and say, damn it, there's not a thing to do? I'm going to have to be patient. I'm going to have to wait. I'm going to have to post a question in the classroom for Mark so he has something to talk about because let's be honest, that Mark's a swell fella and we want him to stay busy. All right, we're going to go through. I'm going to look at some other stuff. This was from a trader. A lot of you guys have seen him in the room. I won't tell you who it was. This is pretty cool. Penalty box rules. Somebody posted this in the room once, and when they were learning to trade with Nexgen 15 years ago, this was what they did to themselves, and it really helped them get an adherence to rules. If they missed a good entry, then they had to sit out for a minute. They set a timer, 1 minute, no trades, no matter what happened. If they entered late, if they missed their best entry, it was a 2 minute penalty because they know that entries are important. Exiting for no reason, jumping out of a trade when there's no reason to jump out of a trade, 3 minutes. Moving the stop arbitrarily to lock in profit in the middle of nowhere, not in an area or price action, was a 5 minute penalty. Exiting late and giving up most of the profit was 7 minutes in the box. Trading against direction was 10 minutes. Trading against an area in determination conditions, 15 minutes. The hell out of your office. And then trading against area and direction, ejected from the pros room. That's what this room used to be called, guys, was the pros room. because the only way that you could get into the pros room is if you spent time in a 101 remedial beginners room and you posted pictures and you participated, and then they let you in with the bigger traders. Now the pros room is the traders chat over there, and if you're an owner, you do have access to it. But this was a pretty cool one. I know people that use what are they? The little hourglasses that are set up for minutes and stuff like that. Kind of fun stuff. Look at that 50-50 with divergence. Off it goes to the stars. They're not rules. They're more like suggestions. Let me see if I can get it to drop in the room. Right now, my Discord isn't functioning the way I want. There it is. But all it's doing is it's keeping you focused on um, adhering to your rules, your plans, right? And Cav, I've tried to jump on your picture like 7 times and it hasn't let me yet. Um, Discord's being weird for me right now. Like I can't even scroll. I've got a gray screen. I don't know if you guys can see my screen. I don't know if you guys can hear me. I just bumped myself out. Can you guys still see the screen? I did like the little exit and come back in. So, oh, but now it's scrolling. Now it's working. I just had to make it think I was done for the day. Cav, beautiful. The path is clear, odds favorable, and that's just a momentum style trade. Let them break. I like the break and pull back. You let them break. You knew where your stop should go. Cav, that's outstanding. Nice job. Oh, thanks, Ron. Yeah, see, there we go. That's what I'm talking about. Little Fanta hanging out at the Riverwalk in San Antonio. Hey, Farak, have a good one. Thanks for being here, man. I like that profile picture. That's a good one. Cav, have an awesome one. Um, Appreciate you being here. Isn't it crazy? If you just wait. Oh, Honduras, huh? What were you doing in Honduras? I'd like to go to Honduras. I've worked with a lot of people from Honduras in my life. The South America thing is I love South America. My wife did I don't remember what it was, but they went to Guatemala and did surgeries for a week straight on the villagers. Um, oh, that'd be cool. I'd love to see that. And that's on the list again. She's a little wrapped up in work right now, but the plan is to get back and do stuff like that, to go do like the Mercy ships off of Africa and go back to South America and do that because she's got a pretty crazy skill set. And it's awesome to be able to donate times and skills like that. So right now I'm just trying to get through the week. We're almost there, guys. NASDAQ says a whole lot of nothing, right? And then CDUB, bad top, divergence. You guys will never believe me, will you? Not until you lose enough. You're missing some fibs on the NASDAQ, CDUB. Um, do you notice how you don't have your synthetics over here? Is that intentional? So one of the things on your larger charts, guys, is they're designed to pull areas from 3 different time frames. Started paying attention to divergence. I do like that. But one of the things on your large charts, and I'm going to show you guys, I've got a picture of it. The way it's designed by John Novak, the way it's designed to give you guys the absolute best of the best advantages, is your large chart has large chart fibs. It's the native fibs, and those will extend all the way to the right. Those will keep going off into the distance forever until they're no longer a part of the equation. There are also on your large chart um, the 5-1 fibs, and those will be the skinny little fibs, and those will stop before they get to the end. And then the big fat ones are the 21. But all three of these time frames are put there because what they do is they give you the clearest picture of potential termination conditions. So CDub, without having that synthetic on there, without running um, that synthetic fib, what happens is you don't have all the information that you could possibly have. You can't see that there's a fib there. You can't see that it's 50-50 and it doesn't change your approach as it should with the management. And then they are brought over, right? So you had a 42 fib as well. And the reason that we use large and small chart synthetics, so that 42 fib should have been right here, and that would have been a 50-50 as well with no divergence, but you would at least know that there was a potential problem there. So if you don't have your synthetics, you can right click, you can activate tick data and pull them over. But I think it's important, guys. There's 3 time frames worth on purpose, and it really helps you get a clear picture of what areas are problematic and what areas are not. And because of the different time frames, the reason we use the lines on the large chart is your large chart may show a 50-50 when your small chart looks like a termination. That's why we don't use a small chart for terminations, because they are different time frames coming through. What do you think, guys? Any questions? Any comments? Any concerns? I don't know if you guys knew this, but I love feedback. If there's something you think I can do better, send me an email. You don't have to call me out in front of everybody. But if you're like, man, I wish you would do this a little more, or I wish you would do this a little less, or I wish that this was included in the class, let me know. I've changed my curriculum 1,000 times in the last 3 years to make sure that everybody gets what they need. Sometimes it needs to be a little more simple. It needs to go a little slower. Sometimes you need more advanced stuff, right? Maybe you're working on using market flow. And you're like, oh, well, I don't want to post in the room because, that may be advanced for the new users. It's okay, guys. Once we get into the second and third hours, all bets are off. Show me your charts. And as long as you annotate them, I don't care what you're working on. I don't care if you're working on counter trend trades. I don't care if you're working on like Cavs gap theory, fighting everything. We went through and we talked about and got some great lessons on gap theory from it. So share everything. Ask all the questions. Don't be shy. And we're just kind of dancing around the area here, right? Decisions are made at fibs, guys. Decisions are made at fibs. On the S&P, they decided to push lower. On crude oil, they're fighting very much. The sellers aren't done, but the buyers haven't really taken over. So, E. Webster, enjoy life, my friend. It's a gift. And guys, I'll see you tomorrow. There's a point where it's just better to shut it down, right? So I will see you guys tomorrow. If you trade this afternoon and you want to bring pictures to the room, please, please, please bring them tomorrow. If you do market replay, bring them tomorrow. If you're watching a video and you're like, man, what the hell does this mean? Bring it to me tomorrow. Let's talk about it. I want you to make it your goal that I'm too busy to take a break tomorrow, that we do 3 hours straight answering your questions. That'll be fun. It's only happened 2 or 3 times. I appreciate that, guys. I love that you guys love the classes. I really do enjoy teaching them. I get as much out of this as you guys do. So I'm a little selfish. I just invite you all in so that I can become a better trader. Enjoy your afternoon. Ron, go get a chili dog. Write your rules on your charts, guys. And I will see you tomorrow morning. I really do appreciate each and every one of you. You guys be good.